So let's begin the CMA Inter Paper 10B Audit Marathon. Okay. Now, before I enter into the subject, let me discuss about what is the composition of this particular subject. You know, you have the paper 10, right? Paper 10. This particular paper is consisting of two parts: corporate accounting and auditing. Okay, and these two parts, accounting you have a weightage of 50 marks, audit you have a weightage of 50 marks. And guess what? The audit is the most scoring paper in CMA. Generally in CA, audit is very toughest in CA course, whereas in CMA the audit is very easy, and the limited syllabus easy to score. Now, you know how's the paper pattern? You will have you will have MCQs for 30 marks, right? Then you will have descriptive for 98 marks, where 28 marks is choice. Then you just have to attempt for 70 marks. So here you have to attempt 5 questions of 14 marks each. Technically you will be given 14 marks questions of 7. Okay, 14 marks questions of not 7, sorry, I think 8 they will give. No, I think 7 only. Yeah, 7 only. 7 they will give. Okay, out of 7, 2 will be choice, any 2. There is no such thing called question number 1 is compulsory, 2 is compulsory. No, out of 7 descriptive questions they give you, any 2 you can leave, remaining 5 you have to attempt. Now, out of these 7 questions, okay, let us assume 4 questions can be corporate accounting, 3 questions can be audit, or 3.5 question will be accounting, 3.5 questions will be for audit. The same way in MCQs, again same, 15 marks will be for accounting, 15 marks will be for audit. Clear? Or sometimes 16:14. 16 marks will be for accounting, 14 marks is for audit. Equal weightage for audit and accounts is ensured throughout the paper. 50 marks of audit paper will be there, 50 marks of accounts paper will be there, plus 14 choice will be there. Total 128 marks of the paper. Now coming to audit, you know what is the syllabus in the audit? You know, the syllabus in audit is just 3 chapters. The syllabus in audit is just 3 chapters. From a pure exam point of view perspective, if you ask me, I will only recommend you to read 2 and 3 chapters. Okay, and only second chapter I am going to cover fully in the marathon, and in third chapter a brief overview I will give you for the marathon. First chapter I will suggest you to ignore at a beginning first. These 2 chapters, if you are perfectly prepared, okay, if you prepare perfectly these 2 chapters, 99% you can attempt 50 marks of the paper in the audit. In the audit you can attempt 50. Why? Like how it is. You see, paper composition. By the way, the book which I am showing is the audit PDF, which is my material. You can download this particular PDF on the website, restofuscma.com website. Go to free resources. You can just go to free resources. Okay, and here you just have to select CMA Inter, and you can see here P10B audit color book. This is a concept plus a question bank which will have all descriptive past exam questions and CMA Institute study material, illustrations, MCQs, all that were there already. Okay, now look at so if those of the students who are having hard copy of this book, if they scan here, they will be routed to the playlist, which the video that we are discussing right now, that playlist will be, you will be routed to. Now you see the weightage of the entire syllabus structure. The syllabus structure weightage is what? 30% is for audit, 50% is for audit, and if you observe, in that 30% is for second chapter, which is provisions relating to audit under Companies Act. This chapter I named it as Companies Act within bracket audit provisions. Okay, then we have audit of different types of entities, which will have again 10% weightage. Now 40%, right? 40% of what weightage? 64 marks, because audit paper will be for 50 plus 14 choice. Accounts will be 50 plus 14 choice. What is the percentage? How much is the percentage? 64 marks into 40%, almost 6 4s are 24. How much it is? No, not 40. Sorry. You should not say like that. 40% of 128 marks. Yes, because no, this is only 50. That is 50. No, yeah, 40% of 128 marks. which is equal to 50 marks minimum, which is equal to minimum 50 marks. Yes or no? Within audit paper, these two chapters will consist of 80% technically. These two chapters weightage consist of 80% technically. But many students, without knowing it, they are first studying basic concepts of auditing, which is in our book 75 pages, whose weightage is just 10 marks. The same 75 pages is second chapter weightage also. The same 70 pages, 75 pages is what? Even the second chapter length also. But the second chapter weightage is 35 to 40 marks. So we should be smart when we are studying. And one more difference I'll tell you. The first chapter is completely theoretical, which talks about basic concepts of auditing, like what are various types of audits, okay, what are the risks. You know, honestly, I'll tell you, this first chapter covers in our CA Inter. In CA Inter, you have audit paper, right? 70% syllabus is covered in this first chapter. In CA Inter, 70% syllabus, what? How much is the syllabus? CA Inter 70% syllabus topics. All those topics were covered. For your understanding, this first chapter has totally 8 topics. The first chapter has totally 8 topics. Okay, first they spoke about introduction, then various types of audit, then they speak about internal controls, risk assessment, audit documentation, evidence, all that, then the audit program, audit documentation, audit evidence, then they talk about internal audit, internal control, then they talk about IFC, internal financial controls, like lot of discussion, audit trail, automated environment, so much, sampling analytical procedure. All these are independent chapters in CA Inter. So something that we discuss in CA Inter, only this particular first chapter related topics were there, right? We will be discussing these topics in CA Inter at an in-depth level approximately for 60 hours. Are you getting it? And in CA Inter, whatever weightage here it is given, whatever topics that they are touching here, those weightage in CA Inter is 70 marks. And that weightage is in CMA, it is only for 10 marks. But I mean, the point is, here everything is covered only brief. They are not covering in depth. But only those who understand those topics in depth can understand them at a brief level. Who can understand a fast track or who can understand a revision class? Those who have already gone through the subject in depth only can understand a brief version. Same way, this chapter is a brief version of various big topics. Who can understand these brief version of these topics? Only those who understand big in-depth version of that, they can understand easily this topic. So if somebody want to understand this topic with context, with 100% contextual clarity, if at all they have to understand, okay, marathon cannot justify. Even in CMA Inter, a normal EO regular class, whatever we give, EO regular whatever, that can also not justify. We will give you a decent idea because we can't touch in depth. Again, the moment we touch it, the duration, course duration will increase substantially. Understood? But these two topics, 7th and 8th, we give in-depth explanation in our EO class, all that. Even in marathon, I am going to give you a decent clarity for sure. Wherever you are having some vacuum, like when you're reading these two topics, some confusion might be there at some application, okay, that I'm going to, like, you know, clearly give you the understanding of entire these topics. Understood? Now without any delay, let's begin the company's provisions relating to audit under Companies Act, which is the major weightage. And to be honest, in CMA Inter paper 10, you can score more in audit than accounts. The volume of syllabus in accounts is enormous, so much. Instead of that, if you are just focusing on these two topics, which is just 90 pages, which is just 90 pages, trust me, and that too, this 90 pages will not seem difficult at all. They will not seem difficult at all. And if you are perfect in these 90 pages, you can easily write minimum 45 to 50 marks of the paper. Minimum 45 you can easily write. 40, worst scenario 40 you can write, and you can score 35 plus. Easily you can score 35 plus. And in accounts, if you are trying to target 30 plus marks, you are getting exemption in paper 10. So 60 plus you will be getting. So in the entire group number 2, this paper 10 is most scoring. In entire group number 2 of CMA Inter, paper 10 is most scoring because of the only reason audit paper. That's it. Okay, this is the subject overview and the weightage and what is the approach. That's why when we do 3/4 strategy video for CMA Inter, we directly tell them to keep basic concepts in the last priority. Okay, sir, when should you study these basic concepts? Should I completely ignore or should I study this? One option, you can completely ignore, nothing to worry. Another option, suppose you don't want to ignore, okay, study it at last. So in every subject, no, we have given something called 3/4 strategy. In every subject we give. First finish in all the subjects 3/4 syllabus, 3/4 syllabus, 3/4 syllabus first. Because with that 3/4 strategy, no, you can attempt minimum 90 marks of every paper. 90 marks of the every paper you can attempt for sure. Once you finish that, then once you get confidence on the major syllabus, once you get confident, then remaining 1/4 you can go and touch it. Able to understand? So that's how the strategy has to be implemented. That's it. Fine. With this, the introduction is over. Then we'll directly start with the actual chapter. Just a minute. So let's begin. The most important topic in this entire revision is Companies Act provisions related to audit. Companies Act provisions related to audit. Now, you know, what are the provisions that we have, you know, Companies Act related provisions? Mainly this chapter is broadly divided into subcategories like this. One we are going to discuss about company audit topic. We are going to discuss about company audit. Company audit means financial audit, statutory audit, independent audit, we call it as, okay, where the financial statements will be audited by independent auditor. The financial statements will be audited by statutory auditor. So that provision we are going to discuss. Then another topic that we are going to discuss is cost audit. Another topic. And in this cost audit, no, we are going to discuss about which companies have to maintain cost records, which companies are liable for cost audit, all that. Then third type of audit that we are going to discuss is secretarial audit. Then another thing is secretarial audit. This is regarding company secretaries have to give an audit report, secretarial audit report, and there is another report called secretarial compliance report. Like that, some two concepts were there. Okay. Now, apart from this, we are also going to discuss about internal financial controls over financial reporting. There is one concept called internal financial controls over financial reporting. And apart from that, we are also going to discuss about NFRA provisions. We are going to discuss about NFRA provisions. And in the same topic, we are also having audit of items of financial statements. In the same chapter, we are also having another topic called items of financial statements audit of items of financial statements. In this items of financials, you will have something like how to do sales, how to do trade receivables verification, how to do trade payables verification, how to do cash verification, inventory verification, fixed asset verification, depreciation expense, employee benefit expense, purchases, all this audit of items of financial statements. Suppose you all know schedule 3, right? In schedule 3 there are many items, right? P&L balance sheet. Within P&L there are many line items, right? How to audit each line item, that is what covered in this particular section. So these are the broad sections or subtopics, I can say, in the second chapter called provisions related to audit under Companies Act. Under that particular chapter, these entire subtopics are available. Clear? And tell me, once you qualify CMA and become a cost accountant, you can only do which type of audit, popularly known as cost audit. The only type of audit that you do is cost audit. Apart from that, you can also do something called internal audits. Apart from that, you can also do something called internal audit. Now, by the way, before I further proceed, what are the sections applicable for you? Now, company audit provisions. Here we are going to discuss about 139 to 147. And we are also going to discuss about something called 177. 177 deals with audit committee provisions. 177 deals with audit committee provisions, whereas 139 to 147, these 9 sections, they deal with statutory audit provisions, how to appoint statutory auditor, government company, non-government company, rotation, remuneration, resignation, removal, duties of the stat auditor, AGM he has to attend, punishment for non-compliance. All these provisions are covered under 139 to 147. And 177 is also talks about something called audit committee, which is related to audit provisions. Then cost audit. There is only one section in the Companies Act that deals with cost audit, that is 148. And secretarial audit, there is only one section in the Companies Act that is dealing with that, is 204. Then IFC related point we slightly discuss in here. Here it will already come. IFC discussion will already come under IFC. Okay. Now in IFC, IFC, financial reporting. This is actually 143 subsection 3 clause number 8. This is the main section for that. Then NFRA, we have a section called 132 under Companies Act. So that deals with NFRA. Whereas audit of items of financial statements, we are going to discuss Schedule 3 audit. We are going to discuss Schedule 3 audit indirectly. Okay, so how to audit various items of financial statements. Now within this I want to give most important clarification here. Companies audit provisions were there, right? Inside this there is an important topic for you. Inside this there are so many topics. Okay, appointment, reappointment. 139 deals with appointment, reappointment, rotation of auditors, so much. 140 deals with resignation, removal of auditor. 141 deals with qualifications, disqualifications. 142 remuneration. 143 rights and duties. 144 prohibited services. 145 duty to sign the audit report. 146 duty to attend AGM. 147 punishment for non-compliance. Like this you have totally 9 sections. Okay, and 147 provisions related to audit committee. Okay, now you have so many sections, right? One of the section is 143. One of the section is 143. Within this 143, one of the subsection is 11. One of the subsection is 11, and that 11 is nothing but Caro 2020. That's nothing but Caro 2020. Almost in every attempt they are asking minimum 5 to 7 marks question from Caro. Okay, this Caro I will not be covering in this session. Okay, I have already covered it for CA Inter students. The same Caro only for you is applicable. There is no change in the law. The same level of discussion is what Caro is applicable for you. How exam questions can come, the same questions is what in CA also they come. So what kind of questions that will be asked in CA Inter in Caro, the same questions will be asked for you in CMA Inter also. So Caro related, because no Caro discussion will take in revision half an hour at least. So that we will save it here. So that time we will discuss for some other. And anyhow in the YouTube I will be uploading this entire video, right? In that Caro will be merged and then uploaded. Able to understand? So that you see after this session will be over. Clear? So in the YouTube video you will find Caro as well. That's it. So next up. Now the first thing what I'm going to start is cost audit. The first thing I'm going to start is cost audit. By the way, what is the chapter name? Provisions related to audit under Companies Act. Correct? 1 minute. Yes. So provisions related to audit under Companies Act, right? Now what are the provisions that are there? One is Companies Act main sections. Apart from that, you also have to read company rules. There is something else called company's rules. Okay, company rules. Within these rules we have so many subtypes of rules. For example, here I told, right? So company audit provision I told, right? Here what rules are applicable, you know? Here what rules are applicable, you know? Audit and auditors rules. What is it? Audit and auditors rules are applicable. 2014. Audit and auditors rules 2014. Cost audit, what rules are applicable, you know? Cost records and audit rules. Cost records and audit rules 2014. So for cost audit topic, cost records and audit rules will apply. Fine. So now these are the two set of rules that we are going to discuss in the cost audit. Now in cost audit you will be finding 4 types of forms, which is important for MCQ's purpose. Okay, 4 types of forms you will find in cost audit: CRA 1, CRA 2, CRA 3, CRA 4. 4 types of forms you will find. Okay, in cost audit chapter. CRA 1, the format of cost records. The format of cost records. CRA 1 form that deals with what? Every company which meet 148 subsection 1 criteria, they have to maintain cost records. In which format they need to maintain? CRA 1 format. CRA 2. CRA 2 talks about a company will appoint cost auditor, right? A company has to appoint cost auditor, right? Now they appointed, no. This point they need to intimate it to the central government. Dear central government, we appointed cost auditor. Okay, so this point they need to intimate it with the central government. What is the time limit for intimation? CRA 2, what is the time limit for intimation? 30 days or 180 days? 30 days or 180 days, whichever is earlier. 30 days or 180 days, whichever is earlier. What do you mean by 30 or 180? 30 days from appointment date or 180 days from the commencement of the financial year. Okay, for example, we appointed cost auditor on 10th July 2024. For example, financial year 24-25 we are discussing. We are discussing in the context of which financial year? 24-25. Now, we appointed cost auditor on 10th July 2024. Now, in MCQ, they will ask you, CRA1 form, deadline is what? Okay. Now, what is the provision says? From appointment days, 30 days. From appointment date, 30 days. Okay, let us see. From appointment date, 10th July onwards to 30 days means, let us assume 8th August it will come or 9th August it will come. 8th August, okay, 2024 will come, 30th day. Or another point is what? 180 days from beginning of the financial year, from 1st April 24 to 180th day. So 27th September 24. That is 180 days from the beginning of the financial year, whichever is earlier. So automatically the answer is what? 8th August 2024. Clear? So what is the time limit for filing CRA2 form? Where CRA2 form is filed to intimate central government that our company appointed cost auditor 30 days from the date of appointment, 30 days from the date of appointment, or 180 days from the commencement of the financial year, whichever is earlier. Able to recollect? Yes or no? That's CRA2 form. Correct? Next, what is CRA3? CRA3 talks about preparation of audit report. Which audit report? Cost audit report. What is the form? What is the format? Okay, what is the format in which cost audit report has to be prepared? CRA3 format cost audit report has to be prepared. CRA3 format. Correct? CRA4. By the way, CRA3 format is audit report format, right? By when cost audit report has to be submitted? Before your appointment is expired. Before the auditor's appointment is expired, cost audit report has to be submitted. Now, CRA4 is what? Filing of cost audit report. What is it? Filing of cost audit report. Be careful. CRA3 is preparation of cost audit report. CRA4 is filing of cost audit report. You know what we do? Once we prepare cost audit report, we hand over it to the board of directors of the company. Once the cost auditor prepares cost audit report, he will hand over it to the board of directors of the company. Now, board of directors, they received cost audit report, right? Within 30 days. What is it? Within 30 days of receiving cost audit report. So once auditor sends to the board of directors audit report, within 30 days of receiving this, directors have to file this cost audit report to the central government. They need to file it. So who will file the cost audit report? Company board of directors will file. Who will give the cost audit report? Cost auditor will give the report. In what format he will give the report? CRA3 form. In what format we will file the report? CRA4. I hope you understood. CRA4. What is the time limit for filing? 30 days from the date of receiving cost audit report from cost auditor. From the date of receiving CRA3 form by board of directors, within 30 days, the company has to file with the central government along with the annexures. Along with various annexures. Company cost account statement they will prepare, all that they will prepare, annexures. Are you clear? Okay, now these are the 4 types of forms that are very important. So CRA4 filing, CRA3 preparation of audit report, CRA2 intimation to the central government regarding appointment of cost auditor, CRA1 format of cost audit report. Clear? That's it. So this is regarding cost audit related main 4 forms available. Okay, now now here there are some terms that you need to understand. Just like in your financial audit. Okay, financial audit means everybody knows, like stat auditor, qualifications, disqualifications. Even in your company law also you have these provisions. A certain appointment of auditors provisions is there in company law as well. Now same way every company will maintain cost records. This is nothing but books of accounts. In a normal financial statements, books of accounts we talk, right? In cost audit they are nothing but correspondingly cost records. Whereas in normal audit we give audit report. Here we call it as cost audit report. Yes or no? In costing, we prepare cost accounting statements. That to which statement? General purpose cost accounting statements. Whereas we prepare financial statements, which are general purpose financial statements. Are you clear? To this cost audit report, cost accounting statements, various other annexures as per CRA 4 form, all that will be attached and then filed. Able to understand. And moreover, CRA 4 will also have XBRL attachment. So what is XBRL attachment? What is in depth of CRA 1, 2, 3, 4? Everything you have it in CMA final. Your CMA final audit is what? Cost and management audit. Cost audit 50 marks portion in CMA final. Management audit 25 marks portion you have. Another 25 marks is dealing with forensic audit, money laundering related provisions, all that in CMA final. Right now in this chapter, in this particular topic, cost audit weightage is somewhere around 10 marks, not even 10, 7, 8 marks only. Out of total Companies Act weightage, cost audit weightage will be some 7 to 10 marks, worst case. Whereas in CMA final, the same cost audit is discussed in depth for 50 marks. Okay, you have something called cost audit standards. We have 4 cost audit standards. You have something called cost accounting standards. Whatever you're learning in cost accounting, management accounting subject, right, that is derived from where? That is derived from cost accounting standards only. We have 24 cost accounting standards. Clear? That's it. Now next up, what is the, now this is the brief idea. Now we understood that there is something called cost records. Now there is something called cost audit. Which companies have to maintain cost records? Which companies have to maintain cost records? You know, there is something called rule number 3. Okay, which rules? I am talking about, when I'm discussing cost records, I'm talking about cost records and audit rules. I'm talking about cost records and audit rules, rule number 3. Okay, and I'm obviously talking about section 148. Now in cost records and audit rules, we totally have 6 rules. Rule number 1, obvious. What is this rules deals with? Rule number 2, definitions. Rule number 3 talks about cost records. Able to understand? Rule number 4 talks about cost auditor appointment. Okay. Rule number 5 and 6 talks about other stuff. All, cost auditor appointment procedure, all other stuff. Clear? Now, rule number 3, which talks about which companies have to maintain cost records. Which companies are liable to maintain cost records? Not every company. Not every company. You know what rule number 3 says? They gave 2 tables. Okay, table A, table B. They gave 2 tables, table A, table B. Table A, they spoke about 6 industries. They spoke about 6 industries. They spoke about 6 industries. Electricity companies. They are generating, distributing, supplying, that and all doesn't matter. You are involved in electricity related operations. Okay. Pharma companies, pharmaceutical companies, completely covered under table number A. We have pharma, electricity, sugar and industrial alcohol. What is it? Sugar and industrial alcohol. Don't worry, it is there in your book. Sugar and industrial alcohol. Just a minute. Regulated sector. You just type regulated sector. In your book also you will find regulated sector. Just a minute. Regulated sectors. Not this. Yeah, here it will be there. So in rule number 3, we have 2 tables. One is table A, another one is table B. Okay, one is electricity. You remember in the same order. Another one is pharma. Another one is petroleum. Another one is telecommunication, fertilizers, sugar and industrial alcohol. Totally 6. This number you should remember. 6 companies are covered. These types of company business also you should remember. So what are the companies? Telecommunication companies, electricity companies, petroleum companies, fertilizers, drug and pharma, sugar and industrial alcohol. And if you see, these are all very, very essentials. These are all very essentials, most important essentials. Understood? Essentials in our day-to-day life. These are very essentials, and that is why these all are regulated by a separate regulatory. These all are regulated by a separate regulatory. And apart from this, there are many other companies which will come under non-regulated sector, there where there are some approximately some 20 plus companies were there, 30 plus were there, 30 plus products. See, generally whenever we think of cost records, only manufacturing companies have to maintain cost records, we assume. No, manufacturers and service sector, both of them has to maintain cost records. That's why you have in cost accounting a chapter called operating costing. Airline industries, hotel industries, how to develop. So no, operating costing is dealing with service sector. Traders, suppose I'm a pure trader, costing is not applicable to me because I'm not incurring any cost. I purchase and sell at margin. So for trading entities, cost records will not apply. Only for which entities cost records will apply? Manufacturing entities and service entities cost records apply. That too, which products and services you are manufacturing, so that cost records will apply. Which products and services you are manufacturing, so that cost records will apply. Only when you are manufacturing. Table B, nothing but table A talks about what? Regulated sector. Table B talks about non-regulated sector. Correct? You may be manufacturing any product and any service. Cost records will apply only when you are manufacturing. Only when you are manufacturing rule number 3, products and services. Cost records concept will apply only when you are manufacturing rule number 3, products and services. Are you clear? Now, rule number 3, products and services means what? You may be dealing with table A product and service, you may be dealing with table B products and service, or you may be dealing with both. Doesn't matter. You are dealing with, you are manufacturing or you are providing services related to rule number 3. Rule number 3 talks about two tables, two types of products and services. Table A products and services, table B products and services. Table A is called as regulated, table B is called as non-regulated. Clear? Now condition. This is first condition. Which companies have to maintain cost records? First condition, the company must be manufacturing or providing services that fall under rule number 3. And overall turnover must be minimum 35 crore in the preceding financial year. Overall turnover of this company in the preceding year must be minimum 35. When they say overall turnover, this company is manufacturing rule number 3 products and services and also manufacturing some other. Doesn't matter. Total turnover merge and then take. Okay, if the last year total turnover is minimum 35 crore and more than that, minimum 35 crore, and company is engaged in manufacturing of table A or table B, nothing but rule number 3 products and services, last year turnover is 35 crore and above, that's it. Cost records is applicable for that company. Cost records is applicable, and cost records once apply, lifetime it is applicable. Once cost records applicable, lifetime it is. Only first time application only we should see this limit. Once it's applicable, they have to maintain forever 99. This is what the interpretation actually able to understand. So only these companies are liable for cost records. Are you clear? Now there are some companies, even though they are manufacturing rule number 3 products and services, even though their turnover is more than 35 crore, still exempted. There are some companies which are still exempted. Micro and small. What is it? Micro and small. Only these two. Not medium. Remember, not medium. Medium is not covered. Only micro and small enterprises under MSMED Act. MSMED Act. A company which is covered under micro and small enterprise as per MSMED Act. Okay, remember MSMED deals with medium income, medium industries also. Micro, small, medium, 3 types of industries are covered under MSMED Act, but only micro and small companies are exempted from cost records. They're exempted permanently. Able to understand? Their turnover may be 35 crore and above. Their turnover may be 35 crore and above. It doesn't matter. You know, a micro and a small company is exempt from, you know, maintenance of cost records. And I don't know how many of you know, in the recent 2024 ending, okay, the definitions of micro company, the definition of small company has been modified. The definition of micro and small company limits have been modified. Okay, now you know what are the new limits? We don't have in the syllabus, but I'm just telling you. Okay, so look at micro and small company. Micro and small company limits. Look at, there is a new limit that is applicable right now. Let it give once. Yeah, you see they have given here. You know, today small company means what? You know, up to 100 crore turnover, it's a small company. Medium company means what? You know, up to 500 crore, it's a medium company. Micro means what? You know, turnover is 10 times. Okay, only micro you remember. Micro turnover means minimum how much turnover? If it is, I mean, maximum turnover is how much? 10. Maximum investment in plant and machinery is 2.5. Small means what then? 10x of micro, 10 times of micro, 2500. Understood? Medium enterprise means what? 5 times of micro. Sorry, 5 times of small. Able to understand? So micro means 2.5 crore, 10 crore maximum rates. Small enterprise means 10x, 10x, 25 and 100. Medium is 5x. Okay, so 25 into 5, 125, 100 into 5, 500. Now you know, a small company, 10 crore turnover. So even if it is a micro company will obviously will not satisfy 35 crore limit. So therefore they are by default exempt anyhow. But a small enterprise, they can have turnover up to 100 crore, which means they can have a turnover more than 35. Technically they are liable for cost cuts, but since they are covered under micro small category of MSMED, they are exempted. That's it. Are you clear? This is cost cuts. Now cost audit applicability. This is where I bet many students won't understand cost audit applicability. They remember, they won't understand it. How to apply the provision, they won't understand it. Now cost audit is applicable to which companies? Cost audit is applicable to which entities? Again, suppose your company, the company that you are dealing with might be manufacturing, okay, table A products, or might be manufacturing or providing services related to table B, or both, and they're also manufacturing or providing services some other also. Able to understand? A single company is manufacturing goods and services not covered under rule number 3, or they're also manufacturing, okay, goods and services covered under rule number 3 and other than rule number 3, both. Let's here on called as rule number 3 products and services. Rule number 3 products and services means table A, table B, both. Now suppose if a company is engaged in manufacturing of rule number 3 products and services, very simple, if a company is engaged in manufacturing or provision of service of rule number 3 products and services, that's it. Now is cost audit applicable for that company? This is the question. Yes, cost audit is applicable subject to 2 conditions here. Okay, now turnover, individual turnover, or they may call it as aggregate. What is it actually word called as? Aggregate turnover from individual products and services covered under rule number 3. They clearly give the word what? Aggregate turnover from individual products and services covered under rule number 3. If it is minimum 25 crore in preceding financial year, if it is minimum 25 crore in preceding financial year, and overall turnover, what is it? Overall turnover from all its products and services is exceeding 50 crore, is exceeding 50 crore or more, minimum 50 or more than 50 in preceding financial year, then table A products are liable for audit. Then table A products are liable for audit. That is why cost audit applicability for regulated sector, they will say. Cost audit applicability for regulated sector is what? Individual products and turnover in rule number 3. Rule number 3 means what? You should take into account table A products and services, table B products and services, both table A, table B, total table A, table B, only those two. Aggregate turnover from rule 3 products, only rule 3 products and services means table A, table B, both you take it. How much is the turnover last year? Hey, it is more than or equal to 25 crore. Okay, fine. And last year, there is one more condition. Last year, overall, total turnover how much? Total turnover, rule 3 turnover? No, rule 3 you take it. Other than rule 3 also you are manufacturing? Yes, take total turnover then. Overall turnover means total turnover. Aggregate turnover means rule 3 turnover. Are you clear? If overall turnover is exceeding 50 crore, if these two conditions both are satisfied, then for table A alone, cost audit is applicable. Table A products means whatever table A products that you are manufacturing, right, only on that auditor has to give audit report. Then when table B products are liable for audit? This limit is increased to minimum 35 crore in preceding financial year, whereas this limit is increased to minimum 100 crore in preceding financial year. just a minor change. If at all your rule 3 products, if at all aggregate turnover from rule 3 products and services is minimum 35 crore and overall turnover from total company in the preceding year is minimum 100 crore, then both the table A and the table B products are liable for audit. Both the table A and table B products are liable for audit. That's it. Are you clear? This clarity you have earlier. This is the clarity. Able to understand? Like they think a company will be manufacturing regulated products separately, non-regulated products again another company will be there. These two provisions are dealing with two different companies. They'll be thinking. No. Are you clear? So in the rules, rule number 4 clearly says if a company producing, manufacturing or providing services aggregate turnover from rule number 3 products. Okay, rule number 3 means what? Table A, table B both. If aggregate turnover is just exceeding 25 but not exceeding 35, indirectly but not exceeding 35, and overall turnover is exceeding 50 but not exceeding 100. Able to understand? So if only these two you satisfied, this you failed, any of this is failed. In these two, any one condition failed. Are you clear? Only table A products you are liable for audit. Suppose if at all you are directly satisfying this limit, automatically you are satisfying this limit, right? If you satisfy this limit means automatically you satisfied this limit, right? So if table B products are liable for audit, automatically table A products are also liable for audit. Simple. That's it. That's cost audit applicability. Now this cost audit is exempt. This cost audit is exempt for 3 categories of companies. 1, remember I told you electricity, that is regulated sector. If at all a company is engaged in manufacturing of electricity, it's a table A product, cost audit is applicable. Correct for that? But suppose my company is there, I'm manufacturing electricity. I am manufacturing electricity. Getting it? But that is not for the purpose of supply to others. That is for my self-consumption, captive consumption. If a company is generating electricity for captive consumption, if a company is generating electricity for captive consumption, cost audit is exempted. Okay? If at all a company is generating electricity, most of the companies will come generate electricity because today Infosys is there, they have solar. They have solar, they're generating electricity. Will you say Infosys is falling under table A and apply cost audit to Infosys? Tell me, no, right? Able to understand? So there are so many companies which are today manufacturing electricity. One of the way of manufacturing is through solar. So why Infosys is using solar? To sell it to others, huh? For self-consumption. Are you clear? 10. Second one. Export turnover. What is it? Export turnover is more than or equal to 75% of total revenue. More than or equal to 75%. That too, export turnover in foreign exchange. If a company's export turnover in foreign exchange is minimum 75% of the total revenue, that company is also exempt from cost audit. Minimum 75%. And there is one more company, cost audit exemption. Okay. And if a company is operating from special economic zone, that's it. Now you see in our book we have given clearly every point they have given clearly. So now look at cost audit required if overall turnover is minimum 50 crore or more from all products and services and aggregate turnover of specified individual products. Specified means what? Rule number 3. Are you clear? So non-regulated, when non-regulated sectors are also liable for audit if overall turnover is 100 or more and specified products turnover is 35 crore or more. Where, by the way, when you should see in preceding financial year, here also in preceding financial year. That's it. Cost records, cost audit, exemption applicable, records applicability audit is completely done. Now, what is the procedure for appointing of cost auditor? What is the procedure for appointing of cost auditor? This I will discuss directly from this. Okay. So first of all, who will appoint the cost auditor? Board of directors will appoint. And cost auditor will be appointed on a yearly basis only. You cannot appoint him for 5 years at a stretch. You can only appoint him on a yearly basis. A cost accountant shall be appointed by board. Okay. He must conduct the cost audit. And most important, a company auditor cannot be cost auditor. An internal auditor cannot be cost auditor. And further, if a company has to constitute audit committee, okay, there are some companies where audit committee is mandatory. If a company is liable for constituting audit committee, then audit committee will recommend the cost auditor to board of directors. Board of directors only ultimately will appoint. Clear? Audit committee will just recommend who is better and how much amount we should pay. Remuneration. Next. What is the time limit for appointment of cost auditor? What is the time limit? We didn't discuss this. Cost auditor shall be appointed for every financial year within 180 days from the commencement of the financial year. The required companies must appoint cost auditor within 180 days from the commencement of each financial year. And before appointing, get a certificate from him. Get a written certificate. What certificate? Sir, I am eligible, sir, for appointment. I am not disqualified. I fulfilled 141 criteria, nothing but qualifications, and the appointment is within the limits. No, even after accepting this cost audit, my total number of cost audits will not exceed 20. Okay, then what are all the pending proceedings against me? As a cost auditor, I will be facing some cases against me sometimes. Some companies, NFRA, somebody will be initiating proceeding. These are the list of proceedings against me. Give a declaration. That's it. Then company will consider all that. They will appoint you. Remember, appointment time limit is 180 days from the commencement of the year. But CRA 1 form time limit is 30 days from the date of appointment or 180 days from the date of financial year, from the beginning of the year, whichever is earlier. Be careful. And you need to file a form, right? What is the form you need to file? Inform CG in central government. Yes or no? Via CRA 2. By the way, I think I spelled CRA 1. No. CRA 2. CRA 1 is regarding cost records. Once you appoint, you have to file form CRA 2 with the central government. What is the time limit? 30 days from appointing or 180 days from commencement, whichever is earlier. I already told. Yes or no? Now, until when? Okay, sir, I appointed the auditor. Till when his appointment is valid? Till 180 days from end of the year. Okay, appointment shall be done within 180 days from 1st April. His expiry of the term will be 180 days from 31st March of the end of the year. Within 180 days until expiry of 180 days. See here, you know why some students may not score full marks. I'll tell you. They will use language in a very simplest way. In the sense, cost auditor shall be appointed within 180 days from the beginning of the financial year. They'll write. Okay, which is also acceptable. Until when cost auditor appointment is valid? Cost auditor appointment is valid up to 180 days from the end of the financial year. They'll write. Up to expiry of 180 days from the end of the financial year or submission of cost audit report. Full stop. That's it. Whichever is earlier, whichever is later, point is not there. Okay, until you submit cost audit report, your appointment is valid. Or maximum tenure is 180 days from the end of the financial year. Many students simply what they write, the appointment is valid up to 180 days from the end of the year. Full stop. That's it. They'll expect 4 out of 4 or 5 out of 5 marks. They'll get only 2 because keywords you are missing. Until expiry of 180 days from the end of the financial year or submission of cost audit report. Dot. Clear? Now again remember. Can a cost auditor be removed by the board of directors? Yes, they can remove him. Okay, if at all cost auditor they feel not competent enough, they can remove it. Okay, and by the way, just because your appointment is valid for 180 days, if at all you don't have, you're not comfortable in the company, you're not okay with the company, you can resign. Your right to resign will not be affected because of the tenure. Your tenure is valid up to 180 days. In between you want to resign, you can happily resign. Okay, next. Now, suppose vacancy, casual vacancy. What is casual vacancy? For example, we appointed you. After appointment, there is a disqualification happened for you and you left the position. You left the company position. That is called vacation of office. That is called as what? Vacation of office. Why? What happened? Why you vacated? Arey, I didn't vacate, man. Company removed me. Or I became disqualified. Or I resigned. Because of all these reasons, or death. Okay, because of all this reason, cost auditor position in the company became vacant. And that vacancy is called as casual vacancy. Now, what casual vacancy if occurs? Cost auditor's office, casual vacancy arises. What company has to do? Again, board of directors, within 30 days, they should fill it. Within 30 days, bring another cost auditor, appoint him. Within 30 days. Again, file a form, CRA 2, because once again you appointed. File a form within 30 days of filling of the appointment. Are you clear? Now, whether the vacancy caused due to resignation, other than resignation, removal, death, doesn't matter. Any type of vacancy, the directors only will appoint the cost auditor. Correct? Now, first, cost auditor has to give a cost audit report, right? He should give a cost audit report based on cost accounting statements. Yes or no? Now, first directors have to submit him. Sir. These are the finalized cost statements, sir. Please give a report on this. Correct? The approved cost statements, they must be signed by director and submitted to cost auditor. Then cost auditor will do the audit and he will submit back cost audit report. Yes or no? Then and the cost auditor has same rights, all that. Finally, the cost auditor must submit the cost audit report along with observations and reservations to board of directors within 180 days from the closure of the financial year. Once board of directors receive it, they need to forward it to central government, right? The company must forward the report to central government with full information, explanation within 30 days of receipt in XBRL format. What is XBRL? I mean, in XBRL format they need to file. Within 30 days of receipt, in XBRL format, they need to file with central government. Okay, receiving is not in XBRL format. Receiving is in CRA 3 format. Okay, and company have to file it with central government, right? In XBRL format. Are you clear? Actually, here one comma will make a difference. Okay, next. If further information is required, government can request it. What are the 4 forms? CRA 1, 2, 3, 4. I already told all these 4 forms. Yes or no? What are the penal provisions? If there is a default in compliance of the aforesaid provisions, cost records maintenance, cost audit appointment, procedure to comply with cost audit appointment, report submissions, in any of these provisions, if you fail, suppose if you fail, for company, the fine will be 25 to 5 lakhs. And the officer in charge, officer in default, because of whom this default happened, for him the fine imprison will be up to 1 year or a fine between 10,000 to 1 lakh. Suppose if auditor failed, auditor himself is failed to comply, then he will have a penalty as per 147. What is 147? We'll discuss in stat auditors provisions. Are you clear? Next, what are the reporting requirements in CRA 3 form? This was asked as a 7 marks question already. In the last attempt or that before attempt only it was asked. Clear? So in June 25 or in December 24, somewhere this was asked. What are CRA 3 form requirements? You know, the auditor, cost auditor has to talk about these points in audit report. In cost audit report, cost auditor has to talk about these 7 points. What are they? What you need to talk about? Whether all necessary information explanations were obtained. Dear cost auditor, when you're doing cost audit, did company give you all information to you? You just have to delete. If positive, you got everything, say positive. If you did not get, say negative. Okay, whether cost records have been maintained as per rule number 5. Rule number 5 talks about format of cost records. CRA 1 format is mentioned under rule number 5. Which companies have to maintain these cost records? Rule number 3. Rule number 3 talks about applicability of cost records. Rule number 4 talks about applicability of audit. Rule number 5 talks about format of cost records. Rule number 6 talks about procedure for audit. That's it. Are you clear? Totally 6 rules in cost records and audit rules. Okay, next up. Whether proper returns received from unvisited branches. As a cost auditor, he may not visit all the branches. Okay, he will not visit all the branches, only few branches he might visit. So whether branch visits, whether audit reports from branches received or not. Next, whether books of accounts give required information as per the act. Which books of accounts? Books and records. Books and records means which records? Cost records. Okay, whether there is an adequate audit system for cost records. They're asking one more question. In the company, is cost records are audited properly by internal audit department? Check out. And whether statements in the annexure, because no, the company is filing CRA 4, right, with all annexures. Are these annexures true and fair? Are these annexures true and fair? Are they giving true and fair? Whether unit wise and product wise cost statements are audited. Unit wise and product wise, some cost statements you need to audit as per CRA 4. So all that were audited or not. That's it. These 7 points auditor has to comment. And don't think that since it came in last attempt, they will not ask next time. There is no guarantee like that. There is no guarantee like that. Are you clear? With this, cost audit segment is completed. With this, cost audit segment is completed. Confident until now? Now, I will finish secretarial audit also. Okay, we'll finish secretarial audit and then take a break and come back. Now, secretarial audit. So, to which company secretarial audit is applicable? First of all, what is secretarial audit? By the way, before that, cost audit objectives, let us discuss once. You know, cost audit objectives, let us discuss once. Here it is there, you can see. Cost records applicability, you know, 35 crore or more. All companies regulated engaged in production of service, yes or no? Applicable to even foreign companies. MSME companies are exempted. Micro small enterprises are exempted. Why? First of all, why cost audit, sir? What is the use of cost audit? For example, if you ask me what is financial audit, there are lakhs of shareholders invested in the company. Okay, and they don't know what is happening with their money in the company. Company gave, this is what happened with your company. Balance sheet, P&L, they gave, this is what we did with your company. How should I believe it? Auditor will come and verify and certify. So in a financial audit, the ultimate purpose of audit is what? Auditor will give you confidence regarding balance sheet and P&L. So whether they're true and fair or not, he'll come and tell you. If at all they're reliable, you look at the data and take a decision accordingly. Correct? Now, cost audit is useful for whom? You know what? Cost audit is completely confidential. Cost records are completely confidential. If a company cost records are released in public, no, people won't even buy. Understood? You know, there are big brands, Dyer, international brands, okay, some handbags and all. There was this was like, there is a mass outrage happened in Instagram, everywhere in social media. The Dyer manufacturing cost, that bag manufacturing cost is 3,500 rupees or 4,000, and they sell it for 5 lakh. Somewhere it was accidentally revealed. Okay, You think, no, branded shirts, US Polo, all that. US Polo, branded shirt, Van Heusen, people generally think they're very super brand, super quality. It's just a perception. That cost manufacturing is 200 rupees. How much it will cost? The cotton, it's just a cotton, no. How much it will cost? Will they stitch with gold material? Exactly. It is a cotton thread. That's it. Any garment you take, the maximum manufacturing cost is maximum 200, 300, 400. Worst scenario 400 rupees. 399 rupees. You know, Flying Machine, all these brands, jeans. So no, Flying Machine, John Players, any like you think so and so, like you take any. There is something mufti. Okay, all these pants manufacturing cost is 700, 600 rupees. They sell it for 2,999, 1,999. That's on minimum. So that's the price. I'm talking about the cost. Able to understand? Now, why a company has to maintain cost records and why cost audit is mandatory? To regulate the prices. To regulate the prices, especially for essential goods and all. A company cannot charge price whatever they want to. Yes or no? So how much, see, how whether a company is charging reasonable price or not, how government will know? Only when I know how much is the cost that they incur. Then I will see how much profit they are charging. Is it reasonable or not? I will see, and then the government will design its policies and all. So cost audit is primary beneficiary. For primary beneficiary of cost audit is government, and another second beneficiary is the company itself. The company will get to know through cost audit where and all they are losing money. Okay, where and all they are wasting lots of resources. That data they will get to know through cost auditor. These are the two main beneficiaries, and as a whole, to the all these social people, like in the sense to the public, common public, they ensure. Cost audit ensures that fair pricing is there. Okay, no, importance of cost audit, you know, cost decision making. It provides authentic data on cost audit. It will identify inefficiencies. It helps in optimum resource utilization. It helps in cost control mechanism. It also helps in government decisions. Yes or no? While extending or abolishing tariff, all that subsidy policies, grants for government, it will help. That's it. These are the benefits of cost audit. Are you clear? With this, cost audit is done. Now let's focus on secretarial audit. Now what is secretarial audit? Like what exactly secretarial audit? You know, in India, there are totally 12,000 plus laws are there. 12,000 plus laws are there. Out of which, you know, probably 20 laws. Okay, probably you will be knowing how many laws? 20. There are how many laws and regulations that we have? Acts, 12,000 plus enactments were there. 12,000 plus laws and regulations were there. Okay, for example, we are maintaining right now small classroom. Okay, there is an environment law with regard to pollution safety, I mean with regard to fire extinguishers, all that. There is one law specifically. Suppose if at all I'm operating in a I'm operating my factory in a forest, then forest related protection laws will be there. Some 7-8 acts will be there. And a company, the moment you are a commercial establishment, somehow you will be using plastic. Plastic related consumption act is there. How to dispose, how to consume act is there. And by default, since you're a factory, you will be taking help of so many laborers. Welfare laws are there, employee welfare laws are there. Scavengers, protection law is there. Pollution control related acts are there. Like that, a company is subject to rigorous various laws and regulations. A company is generally subjected to various laws and regulations which you can't even imagine. You know, if at all a company, if at all a political party has to take a grudge on a company, a government, ruling government, if at all they want to, you know, they want to see what company is this, like they want to take a revenge on this company, they will just apply all the laws and regulations, whatever is relevant for them, and pakka in one or the other they will be caught non-compliance and they ban the company. That's it. Able to understand? There will be so many laws and regulations which a company is generally subjected to. Now, whether the company is complying their business, they are doing their business as per the law or not, how do people know? How do the government know? Through secretarial audit. Especially in listed companies, there is something called secretarial compliance report. There are two issues. Okay, secretarial audit report, secretarial compliance report. Secretarial compliance report is applicable only for listed companies and its material unlisted subsidiaries and its material subsidiaries which are unlisted. Okay, so a secretarial compliance report is different, secretarial audit report is different. Okay, and secretarial audit report is a public document. Cost audit report is not a public document. Cost statements are not public document, whereas secretarial audit report is a public document. So a company will have a legal system. Every company, big companies will have a legal system who will manage all the laws and regulations. That legal department, all the laws and regulations, whether a company is complying time to time or not, a company secretary will be appointed, a practicing company secretary will be appointed, and he will give the audit report. Are you clear? And that report is called as what? Secretarial audit report. Whereas cost audit is given by cost accountant. He will be the appointed. Yes or no? Next. So which companies are liable for secretarial audit report? Secretarial audit report is applicable for two categories of companies: listed company, unlisted public company, subject to three criteria. Unlisted public company subject to three criteria. Okay, one, paid up capital 50 crore or more, turnover 250 crore or more, outstanding loans and borrowings from FIs, financial institutions, how much it is? 100 crore or more. Okay, so three criteria. Public companies, three criteria. Listed company by default applicable. For what about public companies? Three criteria: capital 50 crore or more, turnover 250 crore or more, outstanding loans and borrowings 100 crore or more. If any of these three is satisfied, if any of these three, one criteria satisfied, public company is liable for secretarial audit. Are you clear? Now, who should do the secretarial audit? By the way, who should do? Only a member of the CS Institute. We call him as what? Practicing company secretary, PCS, or a company secretary holding certificate of practice, referred as PCS. Able to understand? Only he should do the audit. Clear? Further, there is something else called secretarial compliance report. Remember, secretarial compliance report is different, secretarial audit report is different. Secretarial compliance report is applicable only for listed entity and its subsidiaries. Which subsidiaries? Material subsidiaries. Listed entity and its important subsidiaries, okay, which are in India. They must undertake a secretarial audit and annex a secretarial audit report within the annual report. Also, they must submit a secretarial compliance report to stock exchanges within 60 days from the end of the financial year. Very important. Secretarial compliance report. What is the time limit? 60 days from the end of the financial year. See, these companies, of course, they are liable for secretarial audit. They have to give secretarial audit report. Further, they should also give secretarial compliance report within 60 days from the end of the financial year to stock exchanges. Secretarial compliance report is submitted to stock exchanges. Secretarial audit report will be submitted to stock exchange, ROC, everybody. That's an open document. Secretarial audit report is an open document, whereas secretarial compliance report is a private document. Able to understand? You don't have to learn all this in depth. Okay, next. Now, what is the procedure for appointment? Obviously, board of directors. Yes or no? Then the company must report any changes in secretarial, like any changes happened, like who originally appointed, we removed him and we appointed somebody else, all that. Qualifications, the qualifications, observations, they should be read at, the secretarial auditor might have given some negative remarks, qualifications remarks, all that. They should be read in AGM. That's it. And secretarial audit report. Secretarial audit report, nothing but the same is there. Like in exam, they might ask is what is secretarial audit report? The secretarial audit report shall follow prescribed rules. Okay, and the report must be in MR3 format. Secretarial audit report is in which format? MR3. Cost audit report is in which format? CRA3. Remember, okay, both the cases 3 only. Okay, now board of directors must explain in full for all qualifications remarks which secretarial auditor made, and secretarial compliance report. Every listed entity and it's all, this point is actually repeated, but it has to be repeated. There it is covered, here it is covered. Clear? Now SEBI notified what is the format of secretarial audit report and what is the format of compliance report for listed entities and its subsidiaries starting from March 31st, 2019. That's it. Clear? With this, secretarial audit topic is also completed. Applicability is important. Secretarial compliance limit 60 days. That logic is important. MR3 form number is important. That's it. If these 3 points, if you remember clearly, MCQ or descriptive, you can handle it easily. Clear? And with respect to secretarial audit, if at all any question comes, you didn't understand what to write, whatever points you know about secretarial audit, write all the points and it will hit. Clear? That's it. So with this, cost audit, secretarial audit is completed. That's it. Yes, we completed discussion about cost audit, secretarial audit is completed. Now let us discuss about financial audit, one of the major topic in this particular chapter. Now, what are the qualifications of the financial auditor? Who can be the company auditor? Okay, a company auditor, a person can be appointed as an auditor only when he is a chartered accountant. Okay, now what do you mean by a chartered accountant? A person who is a member of the Institute of Chartered Accountants of India and having certificate of practice, only he is defined as chartered accountant. Clear? Then, can a firm be appointed as an auditor? Yes, a firm can also be appointed as an auditor, which may be a sole proprietary firm, which may be a partnership firm, which may be an LLP. Okay, now further, only when majority, here we use the word most, but more accurate word is what? Majority. Only when majority of the partners are CS with COP. Further, if a firm is appointed, who should sign the audit report on behalf of the firm? Who should sign? Only the partner who is a CA and having COP can sign the audit report. Now who can become member of the institute? Who can become the member of ICI? The following people can become members. The one who actually any person who was practicing accountancy in India at the start of the act. When CA Act 1949 was started, no, that time whoever is practicing accountants for that, they can register as a member of the institute. Or a person who is a registered accountant or registered certificate at the starting of the act, who already registered as an accountant under CA Act world, so he can continue. And a person who passed CA final examination, completed training as per ICI, he can enroll into it. Or a person who passed government diploma in accountancy, he can also become a member of the institute. And any other recognized qualification, or a member who is a national, who a person domicile means Indian national and studying for a foreign exams and passing that exams, then within 5 years of commencement of this particular CA Act is there, right? So he can become a member. Able to understand? But right now majority of these options were vanished. Right now there is only one way to become a member of the institute, only when you are CA with the COP. Only when you qualified CA final examination, you can become the member of the institute. That's it. Next, are there any disqualifications? Yes, for a company, who can be the auditor? A chartered accountant having certificate of practice. There are some cases where even though you are a CA, you are a chartered accountant, but still cannot be appointed as an auditor. One, body corporate except LLP is disqualified. A body corporate is disqualified. We cannot appoint a company as an auditor. Okay, for example, there are three friends, okay, who all of them are CS. They started one company. These three are shareholders, these three are directors. Can that company act as an auditor of another company? No. Next, officer or employee of the company cannot act as an auditor. Partner of the officer, partner of the employee, employee of the officer, employee of the employee in the company cannot be appointed. Able to understand? Then a person whose relative is a director or key managerial person in the company cannot be appointed. If my relative is a key managerial person in the company, or if my relative is a director in the company, I cannot appoint as an auditor. I cannot be eligible to be act as an auditor. Further, now if a CA has a financial connection, what do you mean by financial connection? Here we gave little simple wordings, okay, but actual wordings are if a person or a partner, if a person or a partner or their relative, okay, holding securities or interest in the company, holding company, subsidiary company, associate company, subsidiary of its holding company, nothing but we call them as sister companies. We call them as sister companies. You cannot be appointed as an auditor if you or your partner or relative, if any of them are holding securities or interest in these 5 companies, that company which is looking for auditor, its holding, its subsidiary, its associate and its co-subsidiary, nothing but sister company. Okay, if at all you are having securities in these 5 companies, you are disqualified. However, one exception is there. Relatives alone can hold securities up to how much face value? 1 lakh face value. Are you clear? Switch on that AC also. Yeah, fine. So a person or a partner or relative holding security or interest in the company, holding subsidiary, associate, sister company, subsidiary of its holding, nothing but, okay, so disqualified. However, a relative can have securities up to face value 1 lakh. Okay, then second disqualification within that, a person or relative or a partner, okay, if they are indebted to the company for an amount exceeding 5 lakh, to whom? To that company, holding, subsidiary or associate or sister company. Instead of using that entire words, I simply use the word related, but in exam you should not write related, you should write full. Okay, a person or a relative or a partner, if they are indebted to the company, holding company, subsidiary company, associate company, subsidiary of its holding company in excess of 5 lakhs is disqualified. Same way, guarantee given to them for an amount exceeding 1 lakh, disqualified. Clear? Then next one, a person who has a business relationship, if an auditor or his firm has a business relationship with that company or related companies. Related means what? Holding, subsidiary, associate, subsidiary of its associate company. Here there is a 6th company which is also covered, subsidiary of its associate company. What is also covered? Subsidiary of its associate company. If you remember, you write it, else these 5 companies you write it sufficient. Are you clear? Next up, now like again there is a one more disqualification called prohibited services. There only 3 companies are covered, that company, holding and subsidiary. Okay, business relationship 6 companies are covered, financial connections 5 companies are covered. Why 5 were connected? Why 6 were covered here? Why 3 were covered at a later? I will tell the reason in the regular class. Okay, like generally how the law making mistakes happens, all that, this and all we discuss. So for revision point of view, not required at all. You don't have to know why everything is like that. Okay, revision is all about what, not why. Clear? Why is something you must have already done. Next. So business relationship. So if a person or a firm has a business relationship with the company or group companies, then disqualified. Business relationship does not include the following. If a CA is already providing services which are permitted, you are providing some services which are permitted even though you are a auditor, that is not treated as business relationship. Or everyday business deals like selling products and services to the CA at a fair market price. Actually here here it is actually arm's length price. Here actually what is it? Arm's length price. So commercial transactions which are entered at arm's length price, not an issue at all. Are you clear? Next. And a person, here 2 points are covered. Here 2 points are covered in the 7th point. A person who is in full time, a CA who is in full time employment cannot be appointed. Or a person who already audits more than 20 companies cannot be appointed as an auditor. Actually the provision is a person cannot be appointed as an auditor if he is already be an auditor for 20 companies. A person cannot audit more than 20 companies at a time. 20 companies, is it per financial year, per calendar year? Nothing. At a time. Whenever you see, suppose today a company is asking me, sir, can you act as an auditor? Today I will just check back how many companies right now I'm acting as an auditor. Right now I will check. If that number is less than 20, I will accept this company. If that number is more than 20, I will not accept. So whenever I receive an offer, whenever a company auditor's appointment proposal I received, I will check on that day, okay, how many I'm acting as an auditor. If it is less than 20, no problem, accept it. If it is already 20, don't accept it. Are you clear? Now this is called, the second point is actually called as audit ceiling. The second point is actually called as what? Audit ceiling. Okay, next. A person who has been convicted fraud in the last 10 years. Okay, a person who has been convicted as fraud by a court, yes or no, and 10 years not elapsed therefrom. That's actual rule, actual provision, nothing but in the past 10 years. If at all you are convicted as a fraud, you cannot be appointed as an auditor. And further, a person providing certain services referred under 144 to the company, holding company, subsidiary company. If a person is providing services prescribed under 144, what are 144? They are talking about prohibited, non-audit services. These are prohibited services. If you want to act as an auditor of a company, you are prohibited to provide these services. What are prohibited services? Accounting and bookkeeping, internal audit, design implementation of financial information system, actuarial services, investment advisory, investment banking, outsourced financial services, rendering of outsourced financial services, management services, any other kind of service as may be prescribed. These are all services which are prohibited for a chartered accountant to provide it to the company. Clear? Next. Now, what is the procedure for appointment of company auditor? What is the procedure for appointment of company auditor? I hope until now you're clear. Now, what is the procedure for appointment of company auditor? Now you look at it. Now here the appointment of auditor is discussed in 2 parts. Government companies, okay, non-government companies. Government companies, non-government. Again the appointment is discussed in 2 parts. First auditor, subsequent auditor. First auditor, subsequent auditor. First auditor is the auditor appointed for first financial year for the company. Who is the subsequent auditor other than first auditor? Yes or no? First auditor is the auditor appointed for first financial year of the company. Now for government company, first auditor is appointed by C&AG within 60 days. Within 60 days from date of registration. Once a company is incorporated, within 60 days from the date of registration, from the date of incorporation, C&AG must appoint the auditor. Okay, suppose if C&AG fails to do so, board of directors will appoint within next 30 days. If board of directors also fails to do so, then members at EGM will appoint the auditor within next 60 days. Yes or no? Within next 60 days. Now this auditor, whoever is appointed, yes or no, as per this timelines, his appointment is valid up to conclusion of first AGM. His appointment is valid up to conclusion of first AGM. Remember, don't say his appointment is valid up to first AGM. No, his appointment is valid up to conclusion of first AGM. Conclusion, until conclusion his appointment is valid. Now same government company, subsequent auditor. Who will be appointing subsequent auditor? Only C&AG can appoint subsequent auditor within 180 days from beginning of financial year. C&AG will appoint the subsequent auditor of government company within 180 days from the commencement of the financial year, and his appointment is also valid until conclusion of next AGM. Until conclusion of next AGM. Are you clear? So the auditor appointed by C&AG subsequent auditor, his appointment is valid until conclusion of next AGM. Now again, non-government company, first auditor who will appoint directly board of directors within 30 days from date of registration. Board of directors shall appoint within 30 days from date of registration. If they fail to do so, then members will appoint within 90 days. Members will appoint within 90 days. Here the question is it next 19 days or is it 60 days after 30 days? If you see the words, if you see the act, the first auditor of a non-government company shall be appointed by board of directors within 30 days from the date of registration. If they fails to do so, members will appoint within 90 days, they say. Within 90 they said, not next to 90, which means 90 has to be calculated from incorporation date. Are you clear? Now his appointment is valid until conclusion of first AGM. His appointment is also valid until conclusion of first AGM. Now what about subsequent auditor of a non-government company? Non-government company subsequent auditor. Non-government company subsequent auditor means what? By the way, remember, government company means public sector. Non-government company means private sector. Private sector. Private limited company is different again. Private sector is different. Private sector means where government ownership is less than 50%. Public sector means where government ownership is more than 50%. Majority owner, if a government, is a public sector. If major owner is not a government, then it's a private sector. Within private sector, within public sector, you have three types of companies again. Public limited, private limited, unlisted. Government company will also have a private limited company. Non-government will also have a private limited company. Private limited company means what? General public cannot enter into ownership. Only owners will decide who can be part of owners. Public limited company ownership is open to public. Listed means you can buy there directly on the stock exchange. That's it. Are you clear? Now subsequent auditor of non-government company. Subsequent auditor of non-government company. So what is the procedure? Subsequent auditor. Very simple. Subsequent auditor will be appointed at the AGM. Subsequent auditor for non-government company will be appointed in the AGM. Who will appoint? By members, by passing ordinary resolution. Are you getting it? Members will appoint him, and until when this auditor appointment is valid, from the AGM where he was appointed, from that AGM until conclusion of 6th AGM. For example, if an auditor is appointed in a company at 21st AGM of the company, for the company it is 21st AGM. An auditor appointed in 21st AGM, his appointment is valid until conclusion of 26th AGM. Are you clear? And if an auditor is appointed in 26th AGM, his appointment is valid up to conclusion of 31st AGM. Again, if an auditor is appointed in 31st AGM, his appointment is valid until conclusion of 36th AGM. If you see real notices of the company, you will find AGM numbering. Okay, for example, you take Tata, some Tata Power, Tata Steel, 133rd AGM, 132nd AGM of the company, 94th AGM of the company, Reliance, 55th AGM of the company, 45th AGM of the company, like that they will mention. An auditor appointed in 43rd AGM, his appointment is valid until conclusion of 48th AGM. Are you clear? So in every AGM, whenever you are appointed, your appointment is valid until conclusion of 6th AGM. You will do audit of 5 financial years. You will be doing audit of how many financial years? 5 financial years related books of accounts and financial statements you will audit, and you will give audit reports on those 5 financial years. Are you clear? Understood? Now look at, so subsequent auditor, in that one main points were there. Every point I covered. Government company means what? By the way, what is a government company? A company in which a government company is the one where 51% or more of the paid up share capital is held by central or state or both, and it includes a subsidiary. And remember, a government company, if at all they have a differential voting rights, instead of paid up capital, we see voting power. Are you clear? Next. Now, before you appoint a subsequent auditor, or first auditor, subsequent auditor, before your appointment, there is some formality. Get a certificate from him. What certificate? Written consent you should get, and you should get a certificate. The certificate should clearly say that the appointment is as per conditions given in the 141. The auditor has to clear little, yes, I am eligible, I am not disqualified. And in the certificate, he will also mention about various pending cases against him. That also will be mentioned. That's it. And in audit, like right now we are discussing what, financial audit, right? Right now we are discussing indirectly audit and auditors rules. We are actually discussing audit and auditors rules 2014. In this also we have 4 types of forms. Okay, ADT1, ADT2, ADT3, ADT4. Understood? Now ADT1 and 2, these are filed by company. These are filed by company. ADT3 and 4, these are filed by auditor. ADT3 and 4 are filed by auditor. You remember CRA 1, 2, 3, 4? CRA 3, auditor will not file anything. Auditor will only prepare the form and then give it to the company. 1, 2, 3, 4. All these are filed by company directly. Whereas here, no, ADT 1 and 2, company will prepare, company will file it. ADT 3 and 4, auditor only will prepare and auditor only will file it. These are all important for MCQs. Okay. ADT 1, what is the purpose of ADT 1? Appointment of auditor, reappointment of auditor, all that. Whenever company appointed the auditor. Whenever company appointed the auditor, you appointed a intimate ROC. Intimate ROC within 15 days. What is the time limit? Within 15 days. Within 15 days, you have to inform the company, central government, or nothing but ROC, okay, that you appointed an auditor. You may appoint it in AGM. He may be first auditor. He may be subsequent auditor. He may be the auditor appointed to fill casual vacancy. It doesn't matter. From appointment date, within 50 days, inform. Are you clear? Then ADT2, removal of auditor. Suppose if a company want to remove the auditor, they need to obtain permission of central government. To do this, first board of directors have to agree. Once board of directors agree, within 30 days, they need to apply to central government, right? How they will apply? ADT2 form they will apply. In ADT2 form, the company will apply to central government within 30 days of the board meeting. Once central government give approval, within 60 days conduct EGM, pass special resolution, then remove the auditor. After removing the auditor, you will appoint one more auditor, right? Casual vacancy. That time you will file ADT1, right? ADT1, central government approval, removal, everything. All this you will file in ADT1 again. Able to understand. Next, ADT3, resignation. What is it? Resignation by auditor. Suppose if auditor resigned, ADT3 form will file. Even if cost auditor resigns, he will file ADT3 form. Remember this point. Even if a cost auditor resigns from the company, he should inform to the company, he should inform to ROC. How he will inform? ADT3 form only he will follow. Cost auditor, are there any qualifications and disqualifications? Yes. Whatever disqualifications financial auditor has, right? Body corporate cannot be appointed, officer employee cannot be appointed, prohibited services, all these disqualifications equally applicable even for cost auditor as well. Are you clear? ADT4, reporting of fraud. Okay, for more than 1 crore, for more than or equal to 1 crore, individual fraud. Individually, if a fraud is more than or equal to 1 crore, ADT4 form has to be filed. By whom? Whichever auditor discovered. If stat auditor discovered, he will file it. If cost auditor discovered, he will file it. If secretarial auditor discovered, he will file it. Are you getting it? So ADT 143 subsection 12 to 143 subsection 15. These sections are dealing with ADT4 only. Are you clear? These are the 4 forms. Okay. CRA forms and ADT forms. These 8 forms you should remember. Pakka one question might come in MCQ 2 marks question. Clear? Next. Now appointment in case of casual vacancy. Now for example, we appointed stat auditor. Now vacancy arises. Vacancy arises why? Either we removed him, or he resigned it, or death, or any other reason. Okay, subsequent disqualification means at the time of appointment he is qualified, but after appointment disqualification arises. And if an auditor after being appointed, if a disqualification arises, it is deemed to be automatic vacation. It is deemed that auditor vacated the office already. Are you getting it? When auditor vacated, on the date of disqualification itself, we assume that he vacated. Auditor getting to know about this disqualification after 45 days. On the day he only left the company. That is not vacation date. Vacation date is the date on which he was affected with disqualification. The date on which he is affected with disqualification. That day itself he is deemed to be vacated. And since a casual vacancy arises on that date, within 30 days, board of directors has to fill the vacancy. within 30 days board of directors has to fill the vacancy. By the way, casual vacancy, what is the provision? Casual vacancy, again, government company, non-government company, all types of casual vacancies in government companies, C and AG will fill within 30 days. That's it. C and AG has to fill the vacancy within 30 days in case of government companies. Now further, non-government, is it because of resignation? Is it because of other than resignation? We should look at the reason. We should look at the reason. Suppose if our auditor office vacant because of other than resignation, directly board of directors will fill the vacancy within 30 days. Within 30 days. Board of directors will fill the vacancy within 30 days. Suppose if it is resignation, within 3 months, EGM has to be conducted. Within 3 months, EGM has to be conducted and members have to approve it. Members have to approve it. Nothing but ordinary resolution. Only for removal of auditor before expiry of term, special resolution is required. Whenever you are appointing the auditor, ordinary resolution is sufficient. If auditor resigned from the company and you are appointing somebody else, board of directors will appoint him first, but that appointment has to be approved by members in EGM. Are you clear? Yes or no? And once after the auditor is appointed, once audit is completed, we will once again conduct AGM. Now an auditor who appointed in casual vacancy, here we are appointing, no? Until when his appointment is valid? Until conclusion of next AGM only. Are you clear? So original auditor may be valid for 5 years. That doesn't matter. Right now you are appointed to fill the vacancy. You are a temporary auditor. Until conclusion of next AGM only you will be there. In the AGM our members will decide whether you will be reappointed or not. They will decide. Are you clear? Now further, if in a particular AGM, if there is no auditor appointed, or if there is no auditor reappointed, we assume that existing auditor is reappointed. We assume that existing auditor is reappointed. That's it. That's it. So board of directors shall fill the vacancy within government company, non-government company, board of directors shall fill the vacancy within 30 days. If at all auditor resigns, then within 3 months, members have to approve the appointment. The new auditor will hold the office until conclusion of next AGM. Government company, C and AG shall fill the vacancy within 30 days. In case worst scenario C and AG fails, then board of directors can fill the casual vacancy within next 30 days. And in this case also, audit appointment is valid until conclusion of next AGM. Why casual vacancy occurs? Either because auditor service end due to death, resignation, disqualification, removal, whatever reason. Are you clear? Next, the returning auditor, reappointment of the company auditor. When the returning auditor must not be disqualified. Can I reappoint the same auditor? Yes, he is not disqualified, you can reappoint him. The auditor has not given a notice in writing that he is not willing. He is willing. Okay, then company has not passed a special resolution to appoint some other auditor. Like there is no special resolution passed in the company that somebody else will be appointed, or in all these cases auditor will be reappointed. So automatic reappointment. What is automatic reappointment? If no auditor is appointed or reappointed at AGM, which means in the AGM, auditor appointment, reappointment discussion itself does not come. Then we assume that existing auditor is automatically reappointed. Are you clear? Next. Now, audit committee. Audit committee will participate. Actually, we have a discussion about audit committee later. Okay, what is role of audit committee? What are functions of audit committee? Some discussion is there we will discuss. Okay, fine. Ceiling on number of audit assignments. Remember I told you, what is audit ceiling? 20. Maximum how many companies an auditor can act, how many companies a CA can act as an auditor at a time throughout. Yet whenever you see him, maximum for how many companies he can act as an auditor at a time? Maximum 20. That 20 shall not include. In the 20, we will not count the following. 1% company will not be counted. Small company will not be counted. Dormant company will not count. And private limited company with paid up capital less than 100 crore. We will not count these 4 companies. In other words, these 4 companies, no limit at all. You can audit even 500 companies, not an issue. Now they said 20 companies, right? If it is a partnership firm, then the 20 will be counted per partner who is in practice, who is in full-time practice. The 20 limit apply. Suppose if a firm has 5 partners, 4 of them are in full-time practicing chartered accountants, then 4 into 20, 80 companies that firm can act as an auditor at a time. Are you clear? Next. So all that I covered. Okay, next. Now, joint audit. For example, me and another auditor, together we are doing audit of same company. For me it is 1, for him also it is 1. I am doing audit of only one branch of the company. It is counted as 1. I am doing audit of 10 branches of the company, same company 10 branches, still it is counted as one company only. A branch is nothing but whether a branch 100 branches, 1000 branches, all doesn't matter, it's single company. How many corporate identification numbers you're auditing, that's it. How many SIN numbers you're auditing, that's it. Are you clear? Next, now again on tax audits, no, chartered accountants can also perform tax audit under income tax law 44AB. Who can do tax audit? Only CA can do. Yes or no? How many he can do? 60 audits per financial year. They will tell you very clearly. 60 tax audit reports only he can sign in a financial year. When I see 1st April 2024 to 31st March 2025, when I see that, you know, that entire gap, no, when I see that entire thing, no, maximum how many you can sign? 60. Are you clear? By the way, in this chapter, we are also having audit report concept, which is very lengthy. Audit report concept is very lengthy. For that, you can absolutely use our CA Inter Audit Marathon and then read this book. Very easy for you. I will tell you what are all to be covered later. Okay. Next, resignation by auditor. Can an auditor resign from the company? Yes. If auditor is not okay with the company, he can resign from the company. And once he resigns, within 30 days, he has to give a form with the registrar. He has to file a form with the registrar. What is the form? ADT 3. In case of government companies, you should also file this form with C&AG. You should also inform to C&AG. Failure to do so. Okay, within 30 days you failed. 31st day, flat 50,000 penalty or remuneration, whichever is lower. First flat penalty will be levied. From 31st day onwards, again, you delay 10 days. 10 days into 500 rupees per day. Suppose you filed ADT 3 form on 40th day. You filed ADT 3 form on 40th day. How many days late you filed? 10 days. First, on 30th day is over. Once 30th day is over, 31st day crossed, 50,000 penalty or remuneration, whichever is lower. Plus, that is fixed penalty. Plus, variable penalty. 500 rupees multiplied by 10 days is equal to 5,000. So, 30. For example, if the fees is 35,000 and penalty is 5,000, total 40,000 is the penalty. Total penalty under this section cannot exceed 2 lakh rupee. Total penalty under this section cannot exceed 2 lakh rupee. Are you clear? This is combinedly, this is covered under 140 subsection 2 and 140 subsection 3. 140 subsection 3 is what talking about penalty. 140 subsection 2 talks about procedure for resignation. Are you clear? Yes or no? Then again, there is something called rotation of auditor. What is a rotation of auditor? Same person cannot continue as an auditor for the same company. Yes or no? Maximum what the rotation provision says is, you know, there are some companies for whom rotation is applicable. First of all, listed companies, rotation is applicable. Unlisted public companies with a paid up capital of 10 crore or more. Okay? Unlisted public companies, paid up capital of 10 crore or more. Again, same unlisted public companies with the public borrowings from banks, FIs, public deposits, 50 crore or more. A public limited company which has a paid up share capital of 10 crore or more, or borrowings from banks, FIs, public deposits 50 crore or more, automatically rotation is applicable for that company. What about private company? Private limited company is also rotation is applicable, where the criteria is only one criteria, paid up capital criteria. If paid up capital criteria is 50 crore or more for a private limited company, automatically rotation is applicable. Are you clear? Next, now what is rotation? As per the rotation, an individual practicing CA or a sole proprietary firm, okay, they can act as an auditor for the company for maximum 1 tenure of 5 years. They can act as an auditor for how many years? 1 tenure of 5 years. Suppose if it's a partnership firm, 1 tenure they can act, we can again appoint for another tenure. Totally 2 terms of 5 years, a partnership firm can be appointed as an auditor. Are you clear? Once an individual completes 5 years term, or if a partnership completes 2 terms of 5 years, okay, we should not appoint them again. We should not appoint them again. Block. We should block them. For how many years? 5 years you should block them. That is called as cooling period. What is it called as? Cooling period. So what is the cooling period for auditor under rotation? 5 years. After 5 years again you can bring him back. No problem at all. Now again, now you need to compulsorily change the auditor, right? An individual who completed 5 years, a partnership firm who completed 10 years, you should compulsorily change the auditor, right? When you're changing the auditor, don't appoint like, you know, right now our auditor is there 5 years over or 10 years over. He's leaving. We call him as outgoing auditor. Now we are appointing new auditor. We call him as incoming auditor. Outgoing auditor, incoming auditor shall not have common partners. Further, outgoing auditor, incoming auditor, they shall not come under same network. They shall not come under same network. KPMG, Deloitte, EY, there are big network firms are there. It's network means brand. It's one brand. Under that, some 4 or 5 firms will be there. Okay, if one firm is going out of rotation, another firm of same network you cannot bring in rotation. Are you clear? Able to understand? Further, rotation, internal rotation. What is internal? Members of the company can take a decision that, okay, we appointed one firm 5 years. In this firm, 5 partners were there. Shareholders may resolve that every year one partner will do the audit. That is shareholders' choice. That is not mandatory. Are you clear? Shareholders also can take a decision in the meeting that audit will be conducted by more than one auditor. More than one auditor means what? Joint audit. Are you clear? Next. Okay, here prior to the act related tenure point is given in the ICA material. It is irrelevant now. Okay, I just mentioned it, irrelevant. Able to understand? Further, remuneration of the company auditor. Who should fix the remuneration? Members only should fix. Cost audit remuneration, member should fix. Company audit remuneration, member should fix. Where they will fix? In the AGM they will fix. Generally, members will fix the remuneration, or they will fix the manner of remuneration. Most of the times they will do manner of remuneration, and the manner is what? They will delegate to board of directors. They will delegate it to board of directors. That's it. Removal of company auditor. Now there are 2 types of removal. Remember, there are 2 types of removal. 140 subsection 1, removal by company. 140 subsection 5, removal by NCLT, tribunal. Okay, removal by tribunal. So 140 subsection 1, what is it? A company can remove. Company means nothing but board of directors. They can remove the auditor before expiry of term. By the way, removal means what? Removal means before expiry of term. If term is expired, you don't have to remove. He is going already. Yes or no? Before expiry of the term is only called as removal. If a company want to remove, first board of directors has to pass a board resolution. First they should conduct a board meeting, pass board resolution. From this board meeting, within 30 days, file ADT 3 form with ADT 2 form. What is it? ADT 2 form with central government. Okay, for approval. Once central government gives approval, within 60 days, conduct an EGM. In this EGM, special resolution you have to pass. Only then auditor will be removed. And before you do this entire process, an opportunity of being heard shall be given to the auditor who is going to be removed. Are you clear? And because of this removal, casual vacancy arises. Who should fill the casual vacancy? Because this is removal, non-government company, board of directors will fill it. Government company, C&AG will fill it. Clear? Next, removal by NCLT. When NCLT will remove the auditor? If auditor is found guilty of fraud. If auditor is involved in fraud in the company and it is proven, NCLT will pass an order to remove the auditor. And automatically casual vacancy arises, board of directors will appoint. Suppose if central government requests NCLT removed, central government requested NCLT and NCLT found that auditor is fraud, within 50 days he should be removed. Within 15 days he should be removed, and central government will fill the vacancy there. But instead of central government filling it, they may give it to auditor. Till date, 140 subsection 5 has been exercised only once. Till date, this section has been used only once. That in the last year or that before year, auditor was removed by tribunal. 140 subsection 5. Are you clear? There is no many removals happen through tribunal because NFRA is actively participating in so many issues. Are you clear? Hello? And further, NCLT, if they remove auditor, right? The auditor who was removed, no? He was guilty of fraud, right? He cannot be appointed as an auditor for 5 years anywhere. Remember disqualification? If at all auditor is convicted by court as fraud, 10 years disqualification. If auditor is convicted as fraud by tribunal, 5 years exactly. Are you clear? Next. So that's about removal provisions. Okay, you can easily understand when you read this. Everything clearly mentioned. Then rights of the auditors. Rights is not a big deal. You can easily understand. So whatever is little tough only I'm focusing on. Clear? Next. Then reporting of fraud by auditor. What reporting of fraud? So 143 subsection 12. Okay, duty to report fraud. Fraud who what? Fraud what? Fraud identified by auditor. What is it? Fraud identified by auditor. If auditor identified a fraud for an amount less than 1 crore, it has to be informed to board of directors or audit committee as the case may be. If audit committee is there, first I will inform them and leave it, they will take care. If audit committee is not there, then board of directors I will inform them. And you know what I will inform? I will inform nature of fraud, okay, amount involved, okay, and parties involved. Further, the audit committee, board of directors, what they need to do in board of directors report, they should also report nature of fraud, amount involved, parties involved, action taken. Are you clear? Further, now suppose, sir, if the fraud amount individual is more than or equal to 1 crore, by the way, individual fraud, this is individually, each fraud size is supposed to be more than or equal to 1 crore, then only we should inform. Then the auditor has to file ADT4 form within 60 days. ADT4 form has to be filed within 60 days to central government. That's why a fraud has to be reported to central government. Why 60 days time limit is given? Breakup. First to 45 days, talk to the company, tell to the directors that this incident happened. They will give reply, right? That now your observation, reply from director, everything in the next 15 days inform to central government. Are you clear? If at all directors of the company did not reply within 45 days, tell the government within next 15 days that I found a fraud and I intimated them, they did not reply anything, this is what my observation, you just inform it. Totally 60 days time limit from the date of identifying the fraud. Clear? Yes or no? Now this particular duty is applicable for cost auditor and secretarial auditor as well. Cost auditor appointed at 148, secretarial auditor appointed at 204, they are also liable for reporting of fraud as per, you know, this particular ADT 4. Are you clear? For suppose if the main auditor or cost auditor, secretarial, if they fail to discharge these duties, in case of listed company the penalty is 5 lakh, in case of unlisted company the penalty is 1 lakh. Are you clear? So if at all they fail to comply with that, the penalty is applicable how much? 5 lakh and then 1 lakh. Are you clear? Next. Then there are some liabilities of the auditor. Penalty provisions we call them as. Then I will discuss about branch audit provision. Okay. Now who can be appointed as a branch auditor? The branch auditor must be either the main company auditor. Okay. Sorry. The branch auditor must be the same company auditor. Okay. Company auditor himself is branch auditor by default, or a separate chartered accountant with certificate of practice. A separate chartered accountant with certificate of practice can be appointed exclusively for that branch. Are you clear? In case of foreign branch, these two can act as an auditor, or an accountant as per law of that country, can also be appointed as an auditor for the branch. That's it. Okay. So first of all, branch audit is required only when a company is maintaining separately branch accounts. Is a company liable to maintain branch accounts? No, there is no mandatory requirement. Right now only banks, public sector banks have branch audit. Only they have branch accounts. You take Reliance company, there is no concept of branch audit. You take ICICI Bank, there is no concept of branch audit because they have accounting centralized. Okay, wherever a company is maintaining branch accounts, then the question of branch audit arises. Clear? That's it. So now that's it. So branch auditor has same powers just like company auditor. That's it. Joint audit. What is joint audit? Appointing 2 or more than 2 auditors for with the same scope of work, same financial year, same law, with same powers. Then we call them as what? Joint audit. In the recent one of the exam also joint audit has been asked. Remember, every provision in this particular book is important, equally important. Anything can be asked and everything can be asked. Able to understand? There is no such thing called A classification, B classification. Everything. Joint audit was tested, branch audit was tested, company audit, qualifications was tested, disqualification. Remember, from this chapter descriptive questions will be 28 marks. 4 7 marks questions will come only from this chapter. 4 7 marks questions. Then MCQs will come. Some 8 marks worth of MCQs will come from this chapter. Totally 35 to 36 marks will come only from this chapter. Are you clear? Next. So what are the benefits of joint audit? Reduced workload, audit will be completed on time, yes or no, and sharing of expertise, quality of work can be improved a lot, healthy competition, knowledge extension, extensive knowledge can be shared because multiple people are involving. What are the limitation? Superiority complex. Since two different auditors are involving, both of them will fight with each other. Okay, I know better than you, like that. Okay, then not suitable for small entities. Lack of coordination between them. Uncertainty of liability. Like I'll tell you why uncertainty will come later. Okay, neglected areas of common concern. Common areas, no, I will be thinking he will do. He'll be thinking I will be doing. Okay, then fees will be shared. Okay, these are all various disadvantages. Now, what are the guidelines for joint audit? There is a standard, auditing standard called 299. Okay, joint audit of financial statements. The standard heading is what? Joint audit of financial statements. Once upon a time there is another heading called responsibility of joint auditor. Another heading is what? Responsibility of joint auditor. So as per this, there are some guidelines given for joint audit. What joint audit guidelines are? What is the relationship and responsibility of joint auditor? This was asked as a 7 marks question already. Okay, what is the responsibility? What is the relationship? Joint auditor is only responsible for work assigned to them, even if they don't prepare a separate report. They are only responsible for work allocated to them. Not every work will be done by every auditor. Each joint auditor will divide the work a little bit and then they do only that work, and they are responsible only for that work. In that work some issue is there, only they are answerable. If other joint auditor made a mistake, they are not responsible. Are you clear? There are some works where all joint auditors have combined responsibility, joint responsibility, indivisible responsibility. What are the areas? Work is not divided, all of them have performed together, or decisions are taken collectively, or matters were brought to notice of all joint auditors. Okay, some issue is there, everyone got to know about it and none of them acted upon it. Okay, and for ensuring financial statements that comply with statutory requirements, for verifying presentation and disclosure is as per applicable financial reporting framework. So to ensure that financials are prepared as per applicable framework means to ensure that balance sheet, P&L are prepared as per schedule 3. All joint auditors have to check it. Whether to ensure balance sheet, P&L are prepared as per accounting standard, all joint auditors have to ensure it. And finally, the audit report given by them shall also be as per so and so law. Okay, whether audit report is as per law or not, all of them are combinedly responsible. Are you clear? Now there must be a proper coordination between them. Correct? If one joint auditor, when he's doing the audit, he found some issue related to other joint auditor, he should inform him. Correct? Yes. When he should inform him? After audit is completed, before audit is completed? Exactly, before audit is completed. That's it. Then now joint auditors, now two of them or more than two of them are doing, right? Now I am doing some work allocated to me, he is doing some work allocated to him. Do I have to review his work? Do I have to check his work? No need. He is also CA like you. If he do something wrong, he is only answerable. You don't have to worry about it. Are you clear? So a joint auditor can rely upon work of other joint auditor. A joint auditor can rely upon work of other joint auditor. Then reporting. Generally joint auditors will give a common report, all of them together. For example, you take State Bank of India, they have 12 joint auditors. State Bank of India has 6,000 branch auditors. They have how many branch auditors? 6,000 branch auditors. State Bank of India has 24,000 branches. 18,000, 19,000 approximately were branches are not liable for audit at all. Only some 4 or 5,000, 6,000 branches approximately were liable for audit. And the State Bank of India as a whole have 12 joint auditors. And you know how many audit reports they gave? One audit report. On the same audit report, all 12 of them signed. So joint auditors generally give a common audit report. Yes or no? All of them give a common opinion, common audit report. Suppose if one of the joint auditor want to give a different opinion altogether, he can give. He is not bound by majority. A joint auditor is not bound by majority. When a joint auditor is giving a different audit report apart from other auditors, then two audit reports are there now. Two of them will refer about other audit report in their audit report. So the auditor, one auditor disagreed, no, in this report I should mention in other matter paragraph, please refer another audit report. The other auditors in their audit report, they should mention about my report, so that shareholders will get to know. By reading one report, they get to know that there is another report available. So they will read both and take their own decision, their own conclusion. Are you clear? With this, joint audit concept is over. Are you confident? Now, what are the provisions of Companies Act regarding audit committees? Remember, audit committee is not applicable for private limited companies. It's only applicable for public limited companies and listed companies. Public limited companies, 3 criteria: paid up capital 10 crore or more, turnover 100 crore or more, loans and borrowings, debentures and public deposits all put together exceeding 50 crore. Only then audit committee concept is applicable. Confident. Audit committee is applicable only then. Now, audit committee must have minimum 3 directors, where independent directors must have the majority, and audit committee members must have ability to read and understand financial statements. Means audit committee members, audit committee, whoever directors are part of the committee, they must have the ability to read and understand financial statements. What are the functions of audit committee? Many times this was asked, what is audit committee, to which companies it's applicable, what are the functions of audit committee? The functions are: they participate in auditor's appointment, they recommend, they review and monitor auditors' independence, whether auditor is acting independently or not. Audit committee will monitor. They verify financial statements, they verify related party transactions, they verify loans and investments, they focus on valuation of assets. Audit committee will review, will evaluate internal controls, nothing but financial controls and risk management system. Audit committee will monitor use of funds raised through public offer. Suppose company raised some money from public, whether the company raised the money is used for the same purpose or not, audit committee will monitor. Clear? Now, what are the powers of audit committee? They will comments, audit committee can ask for auditors comments on various matters. So audit committee will tell auditor, sir, please focus on so and so 10 issues, sir, please give me a report on that. Audit committee can ask that. They have a power to get comments from auditor on various matters. Audit committee, the committee can investigate matters related to whatever their responsibilities, and they can take professional advice. Audit, the board report must disclose audit committee composition and non-accepted recommendations. There are so many things which audit committee will recommend to board of directors. There are so many things which audit committee will recommend to board. Some of these recommendations board may not accept it. Wherever there is a non-acceptance, board of directors have to disclose the reasons in board of director report. Able to understand? Next, audit companies accepting public deposits or borrowings over 50 crore must establish whistleblower mechanism. Audit committee will review that whistleblower mechanism of the company, and the whistleblower mechanism must safeguard against victimization, and and it will allow direct access to audit committee chairperson. The company must disclose on its website and in board report about this whistleblower mechanism. That's it. Clear? Next, cost audit we already covered. You remember, cost audit is over. Then we also covered secretarial audit is over. Okay, now company audit is over, cost audit is over, secretarial audit is also over. Next, just 2 minutes. Okay, just 2 minutes. Now let's continue the discussion. And remember, in this topic, in this chapter, first topic is dealing with company audit. Second topic is dealing with cost audit. Third topic is dealing with secretarial audit. Fourth topic is dealing with items of financial statements plus audit of some special transaction. How to do audit of dividend declared, how to do audit of interim dividend, how to do audit of final dividend. All these are covered here. How to audit alteration of share capital, how to audit buyback, like that some provisions were there, they were covered here. Items of financials, how to audit sales, how to audit purchase, all this, which is very easy. In this, there is one concept called assertions. Okay, assertions concept is there, that alone I will discuss. Okay, assertions means what? Remaining all, if you understand assertion meaning, remaining you can understand. Assertion means what? For example, in a company they are showing balance sheet asset side, balance sheet they are showing 10 crore. Plant and machinery 10 crore. This is a balance sheet as on 31st March 2025. They are showing it as 10 crore. Plant and machinery 10 crore. What do you mean by this? They are saying that the plant and machinery is existing. They are saying that this is the total value of plant and machinery completeness. They are saying that this is the plant and machinery that is there as on 31st March, that is cut off. They are saying that this entire amount is net value of the plant and machinery after revaluation, after impairment, all that. Indirect they're talking about valuation. These are various assertions companies making indirectly. Assertions means what? Those points which companies disclosing explicitly or implicitly. Yes or no? They may say just P&M 10 crore. But what indirectly management is asserting here? They are asserting that 10 crore worth of machinery is existing there. 10 crore is the total value of machinery there. 10 crore is the value of machinery there. They are asserting all this. As an auditor, we should verify these assertions. As an auditor, what we should do? We should verify these assertions. Next. Now, these are the assertions related to balance sheet. Okay, existence, and one more thing. 10 crore is the right. There is one more assertion called rights and obligation. Rights and obligation means what? The company saying that we are owner of the plant and machinery. That is why it is shown in the balance sheet asset side. We are showing asset side because we are owner. Able to understand? Now, these are the assertions related to balance sheet. Existence, rights and obligation, completeness, valuation, cutoff, and even presentation and disclosure. Something else is also there. Okay, accuracy. There are many other assertions, but these are primary main assertions. Relating to P&L items, transactions, company will give, companies also will assert occurrence. Okay, occurrence is an assertion to test overstatement. Okay, completeness is an assertion to test understatement. Like that, some discussion is there, so much of discussion is there. So these are the basic assertions. Occurrence, again here also cutoff. Then here something called measurement. There is something called measurement. These are the 4 broad assertions related to transaction items. Okay, so when they say P&L account, sales 5 crore, they say indirectly company saying this much sales occurred during the year. Yes or no? This is the total value of the sale. Are you clear? And up to 31st March, whatever sale I showed, they were delivered to customer. Are you getting it? And total sale value is gross 15 crore minus excise duty 2 crore minus discount 3 crore is equal to some service GST, all that. So 15 crore minus GST minus discount is equal to some net amount 10 crore. Measurement. So the company directors assert something in the financial statements, and those assertions, those what they're asserting indirectly, impliedly, explicitly, we call them as assertions. Are you clear? Okay, next. So this is the basic introduction to the entire that chapter. If you want to, that particular topic, if you want to understand it. Okay, fine. So that topic you read on your own, which is easy. And remember, important, pakka 7 marks question will come from the topic. Okay, cost audit and secretarial audit put together, minimum 7 marks question. Company audit, minimum 7 marks question. Items of financials and special transactions audit, 7 marks question. Okay, then we are going to discuss about audit report certificate, all this. Audit report topic, 7 marks question. Okay, but now here, no. So what is an audit report and what is an audit certificate? Report contains opinion. Opinion is a reasonable assurance. Reasonable assurance is a high level of assurance, but not a guarantee. Certificate is an absolute assurance. Certificate is about a fact. Certificate is about a fact. Okay, opinion, it's a confirmation. It's based on assumption. It's based on actual figures and fact. Audit report is a broad in scope. Certificate is limited in scope. Here we give an opinion, advice. Here there is no advice. You should say the fact. So audit report is a mix of facts and assumption. Certificate is about actual figures. It's only opinion, but not a guarantee. Certificate is guarantee. Audit is reported every year. Audit is conducted every year. Certificate is issued whenever it is required. And since opinion, liability arises in case of negligence. If audit opinion goes wrong, there is a possibility of liability. Whereas audit responsible, certificate is wrong, absolutely responsible. Clear? And there is a prescribed format. Certificates, there is no format. Depending upon the circumstance, that format will be decided. Clear? Next. What are contents of audit report? What are contents of audit report? For this, what I advise, if you want to understand this better, I advise you to refer my audit report marathon in CMA, CA Inter. Okay, so in audit report now in CA Inter, it will be more depth. You just watch it normally once and then come back and read this. Okay, there it will be in-depth discussion will be there, but here you come back and read this normally, you will understand this. But you want to understand this briefly, it is tough for me to explain also. Briefly, it is tough for me in the shortest time possible. Okay, so you better watch that marathon where audit report topic will be discussed for 2 hours for CA Inter students, which includes Caro. I am also telling including Caro. Anyhow, you have to watch Caro. Yes or no? So this 2 hours audit report, no, audit report in CA Inter marathon will be there. My September attempt marathon is there. My May attempt marathon is there. The same marathon you can happily watch. Open that, open timestamp audit report. Just listen to that. Okay, you will understand. In that, no, I will be showing audit reports also. If you want to listen to it. Else that audit report, whenever I'm showing, you can skip it. and go further. But when it comes to Caro, 100% be sure. And here, by the way, in this audit report, we are discussing about key audit matters. We are discussing about emphasis of matter. We have a discussion about other matter para. We have a Caro. We have report on everything, whatever is there in CA Inter, one full chapter is there here. But here, instead of discussing in depth, they discuss briefly. But you can't discuss like that briefly. I can only give you 10 sentence meaning in the short term, but that will not help you. If you want to remember the subject, you have to listen to that like that. You have to listen to that carefully. So 2 hours if you watch audit report, this topic will be over. 7 marks will be with you easily. Are you clear? Next, apart from audit report, what else we have? You see, entire Caro I gave here, which is actually a copy paste of CA Inter material. Copy paste of CA Inter material. Next. Then we have something called entire qualified opinion, adverse opinion, disclaimer, when we will give emphasis of matter, other matter para, everything is given here. I don't know why they gave everything. Okay, then report on IFC. What is it? Report on IFC, internal financial controls. See, companies will have internal controls, which are three types: operating control, financial control, compliance control. Compliance control is what secretarial auditor focuses on. Financial controls is what we chartered accountants will focus on. Okay, now first of all, IFC is applicable for whom? IFC is applicable for all companies, auditors. Every company auditor, they have to compulsorily give IFC report. But IFC reporting does not apply to private companies, which are OPCs, small companies and other private companies where turnover is less than 50 crore, borrowings are less than 25 crore at any point of time, and both the conditions. If a private company whose turnover is less than 50, whose borrowings are less than 25 crore, for them IFC reporting by auditor is not required. IFC reporting auditor need not. Very simple. What is IFC reporting? Statutory auditor has to give in his audit report his opinion on operating effectiveness of IFC implemented by the company over financial reporting. Whether the company's internal financial controls over financial reporting, are they operating effectively or not? Statutory auditor has to report. 143 subsection 3 clause number I. Okay, this is the requirement of statutory auditor. Apart from that, on IFC there are various other requirements. On IFC there are various other requirements. For example, on IFC, okay, fine. So what exactly internal financial controls is all about? What exactly internal financial control is all about? Definition of IFC. Definition of IFC. You see this. IFC means what? Definition of IFC. Internal controls over financial reporting refers to a process. It is designed to provide reasonable assurance about maintenance of records, accounting records, so that they reflect transactions and assets accurately. And they give an assurance that transactions are recorded for financials as per GAAP. IFC ensures that prevention or timely detection of unauthorized acquisition, unauthorized use, unauthorized disposal of assets that could affect the financials. Then what is auditor's role? The auditor must conduct audit of IFC or FR, including you need to plan the audit, you need to test the operating effectiveness of controls, and finally report it. So plan the audit, test operating effectiveness, then report it. Now, reporting on adequacy and effectiveness of IFC even applicable for consolidated financial statements as well. IFC reporting is not required for interim financials. IFC reporting is required only for annual financial statements audit, whether it is standalone financials, consolidated financials, as the case may be. Are you clear? Whenever IFC question comes, you should write only this. You write only this. Okay, so which companies report? 143.3 says, okay, the auditor report should state whether a company has adequate IFC and their operating effectiveness. This is applicable for financial year from 1st April 2015 onwards. So here there is a guidance note issued by ICI. The auditor can use that guidance note while reporting on IFC. That's it. Clear, all of you? And IFC reporting is not applicable for one-person company, small company, other private limited companies with turnover less than 50 crore and borrowings at any point of time does not exceed 25 crore. Nothing but less than 25 crore. That's it. Are you clear? Then we have a concept called NFRA. We have a concept called NFRA. Remember, before NFRA there is a body called NACAS. Okay, there is a body called NACAS. What is that? National Advisory Committee on Accounting Standards. So this NACAS objective is what? They will recommend to central government about accounting standards. Now that NACAS is replaced by NFRA under the New Companies Act 2013. Able to understand? So what is NFRA? NFRA is a quasi judicial organization responsible for accounting and auditing. It's like a judicial body. It operates like a judicial body. It can call somebody and examine on him oath. So this powers generally is available for courts only, but NFRA is also something like a quasi, similar to a judicial body. Quasi means what? Similar to a judicial body. Are you clear? Now NFRA will have totally one chairman and maximum how many members? 15 members, and the chairman must be competent with competence in accounting, auditing and finance. Are you clear? Now NFRA will have totally 3 committees: accounting standard committee, audit standard committee, enforcement committee will be there. Now what are the functions and duties of NFRA? They will recommend standards to central government. They monitor compliance by companies with accounting standard. They monitor compliance by auditor with auditing standard. They monitor, are auditors doing audit as per standards? They monitor it. And they oversee quality of service of the professionals involved in ensuring compliance. NFRA can take, they can select some auditors randomly, and what audits they reports they signed, they can review it. How are they working? They can review the quality of audit performed by professionals. NFRA can oversee the quality of audit. Then what is NFRA's role in audit profession? One, recommending auditing standard. One is recommending auditing standard. They monitor and enforce compliance with auditing standards. Okay, they recommend in standards formulation, and they monitor whether members are complying with these standards or not. Able to understand? So see, they have powers to investigate. What they can investigate? They investigate any matter of professional or other misconduct. If at all NFRA received a complaint from some companies that their CA is not working properly, I can investigate based on oversight. Suo moto, on its own, NFRA on its own randomly select some companies and investigate how their audit is going on. If investigation reveals non-compliance by company, board or body corporate involving fraud more than or equal to 1 crore, NFRA will report these findings to central government. Yes or no? Now, for auditor companies, by the way, NFRA does not have power over all companies. It has power over listed companies and its subsidiaries, banks, insurance companies. Banks, insurance, listed companies and its subsidiaries. Other than these companies, quality review board will take care. There is another board called quality review board. They will take care of remaining companies. But for listed companies and its material subsidiary companies and banking companies, insurance companies, only NFRA can look into. Are you clear? Now, one of the major function of NFRA is they monitor and enforce compliance with auditing standards. They monitor and enforce compliance with auditing standards. So the NFRA may review working papers. They can check audit plan of the auditor. They can check auditors documentation, communications, all that. They can evaluate quality control system of the auditors. Like every auditor will have a quality control system. Like they will have some SOPs, policies and procedures on how to do audit. Okay, that policies and procedures NFRA can audit. How auditors policies and procedures are, they can audit. They may do further testing of audit, supervisory and control procedure. After doing all this, they can ask further information. See, if required, asking the auditor to personally present also. NFRA can ask additional information. They can ask auditor to personally present. And NFRA, this monitoring enforcement, they may do directly or they may do through officers or experts who have sufficient audit experience. If at all they find any non-compliance, they will published on the website unless it is not in public interest. Further, any confidential matters, if at all not published unless it is public interest. Okay, at public interest, if they require, they publish. At public interest only, if at all they don't want to publish, they will not publish. Are you clear? You can open NFRA site, you can find NFRA orders. Okay, just NFRA, you just type, you will find NFRA website directly, you will get it, and they will send a confidential report to central government. If at all any violation of law, violation of standards suspected, NFRA, authority means what here? National Financial Reporting Authority, NFRA, nothing but authority. Authority may initiate further investigation and enforcement can be done through concerned division. Are you clear? Then sources, NFRA will receive recommendations from CA Institute also on what? On new accounting standard, auditing standard, amendment to existing standard, and further NFRA may ask additional information from ICA regarding all this, and finally NFRA will consider their recommendations and additional information, and finally they will recommend to central government about new auditing standard, new accounting standard, changes to existing auditing standards, changes to existing auditing and accounting standards. So that's regarding NFRA. That's it. Are you clear? Entire this chapter we covered decently. I won't say in depth because there's a revision class, remember. I can't cover it in depth also. Confident everybody That's it. Now here, totally how many topics we have in this chapter? Once again I'm telling you, totally we have 7 topics, correct? Totally we have 7 topics. One is company audit, this we covered fully. Cost audit we covered fully. Secretarial audit we covered fully. Yes or no? In company audit, no, duties of auditor point is there. 143 reporting duties are there. That I didn't cover because I asked you to watch audit report topic in my CA Inter. There it will be covered. Okay. Only after that you come back to this book and then read. You will understand very, very thoroughly. Clear? Then we have 4th topic, items of financial statements. Then we have something called IFC reporting. Then we have NFRA. We have one more audit report topic. Audit report. What is else we have? Audit report. Now I told you audit report, watch CA Inter classes, this and the CA Inter. Items of financials also we have in CA Inter, more in depth it is there. You can watch that also, but I think you can understand by looking at this itself. No need to. Okay. NFRA we covered, IFC we covered. So total weightage is 28 marks descriptive, 7 to 8 marks minimum MCQs, which is equal to 35 marks. 35 marks of minimum paper will come only from this chapter. Confident or not? That's it. Now then you have something called different types of entities chapter. Okay, fine. I'll just stop this video and 2 minutes we'll immediately revise this briefly. So in this chapter, audit of different undertakings, what are all we have predominantly? What are all we have in this chapter? We have one regarding hospitals. We have another one called hospitality. Okay, hospitality means restaurants, hotels, amusement parks, cinema theaters. All these audits, how to do audit, they covered. Then we have something about this one, local bodies. What is it? Local bodies, audit of local authority. Okay, that's nothing but local body. Then we have something called cooperative societies audit, cooperative society. Then we have something else called bank audit. These are the broad audits available. Is there anything else? That's it. I think these are the 5 or 6 items which were there. Okay, now I will give you brief idea what are all this. Okay, now cooperative societies. Okay, you will be having a brief discussion of cooperative societies. In fact, cooperative societies audit is there in my CA Inter also. You can watch that and then read this here. It will be dead easy for you. Okay, but anyhow, I'll tell you, there is an act called Cooperative Societies Act 1912. There is an act called Cooperative Societies Act 1912. Okay, this is called a central act. This is called as Central Act. As per Cooperative Societies Act, only a central registrar will do the audit. However, he will not do the audit. He will only appoint the auditor. So in a society, members will not appoint. The auditor is appointed by registrar. Who can be the auditor? Chartered accountant can be the auditor, or a person who is having diploma in cooperative accounts. A person who is having diploma in cooperative accounts, he can act as an auditor. Okay, now any of them can be appointed as an auditor. By whom? Registrar of cooperative societies. Registrar will appoint him as an auditor. Now there are some special features in cooperative society, like for example, one of the special feature is overdue debts. What is it? Overdue debts. Overdue debts means what? If at all society, what society will do? Society will lend money to members. Some members will not repay on time. There is a default, that's called overdue debt. This overdue debts, the auditor has to report in 3 parts: less than 6 months, 6 months to 5 years, more than 5 years. He should classify like this. And auditor should also tell about recoverability, how far a company can, how far the society can recover. And there is another concept called overdue interest. There is another concept called overdue interest. Interest on the overdue debt, because you gave a loan, interest is accrued every year, right? But this already became overdue debt. Now interest on overdue debt do not recognize in P&L account. Instead of that, interest amount transferred to overdue interest reserve account. Overdue interest reserve account. It is not to be recognized in P&L. Interest on overdue debt will be recognized only when it is actually realized in cash. Are you clear, all of you? Then we have provisioning of funds. Provisioning of funds, or you can also call this investments of funds. Can a society invest funds? Where the society can invest their funds? They can invest their funds in another society. they can invest their funds in a bank, scheduled banks as a fixed deposit they can keep, fixed corporate societies. They can invest funds as per section 17 of the Societies Act. Can a society buy shares and securities of a normal private limited company or a listed company in a stock exchange? Prohibited. Are you clear? Further, a society has to transfer to reserve fund. They have to transfer to reserve fund. Minimum 25% of profit after tax. Minimum 25% of profit after tax has to be transferred to reserve fund. If at all society don't want to transfer that much, at least minimum 10% has to be transferred. Minimum 10. But remember, it is actually minimum 25. With the permission of the registrar, you can reduce. It can be relaxed to 10%. Permission, if at all registrar gives the permission, it can be reduced it to 10%. Are you clear? So a society, minimum 25% of the PAT has to be transferred to reserve fund. Minimum 10%. I mean, at any cost, it cannot reduce below 10% with a special permission of the registrar. Further, a society can give charitable contribution. A society can donate for charitable purpose. Maximum 10% of profit after tax after transferring to reserve fund. First PAT transfer to reserve fund 25%. Still you have profit. On that minimum 10% you can transfer to charitable purpose. That's it. These are some important points in the societies. Are you clear? And again, shareholding. How much is the maximum shareholding in a society? How much shares a society, a corporate society, a shareholder can hold? Maximum face value 1000 or 20% voting power, whichever is lower. Okay, you cannot have more than 20% voting power, or you cannot have maximum shareholding 1000 unless the shareholder is another society. If a shareholder is a society, they can have even 70-80% shareholding, no problem. But if a shareholder is an individual, he cannot have more than 20% shareholding, and maximum share capital face value is maximum 1000 rupees. Main points over. Are you clear? All of you, main points related to societies over. With this knowledge, you just go through it, you will easily understand. Okay, then apart from that, then we have something called local body, local authority or local body. What is the objective of local body audit? To ensure financial statements are true and fair, to prevent and detect fraud and error, to ensure money spent is value for money spent is received or not. Like that, there are some 4 objectives. Just watch the objectives first. Local body means what? Below state government. Any government authority which is less than state government, it's a local authority. Okay, local authorities are at urban level, or at urban level it is there, at rural level also there. At urban level we have municipality, municipal corporation, okay, and Jilla Parishad, I mean municipality, municipal corporation. At rural level, panchayati, like that some committees were there. MCQs can come, be careful. Look at this. Bank audit. I missed to add this point called bank audit. Bank audit also you have a bank audit also. Audit of society, and 7th one is local authority, I guess so. No, that's it, I guess. I think before bank audit it is there. Where is local authority? Hospitality. Yeah, local self-government. There is nothing but what? Local self-government. Okay, so there is a constitutional amendment, 73rd and 74th constitutional amendments formally recognize local self-government as both urban and rural areas. So at a rural level, Grama Panchayat, Panchayat Samiti, Jilla Parishad will be there at a district level. Now urban, municipal corporation, municipality, notified area council. Nagar Nigam, Nagar Palik, Nagar Panchayat. Whereas here, Gram Panchayat, Panchayat Samiti, Jilla Parishad. These are all Jilla Parishad, and below that all comes under rural local authorities. Okay. Audit objective: fairness in financials, report on adequacy of controls, value for money spent, and detect frauds and errors. Okay. What are the general points? Appointment of audit should be as per regulations. They should understand financial controls and accounting controls. They should consult minutes and resolutions. They should check grant utilization, all that. Investigate areas prone to fraud and ensure expenditure is authorized. Ensure that all large expenditure generate expected outcome and are run economically. You know, this is actually nothing but performance audit. This is actually nothing but performance audit. So briefly, this is what local self-government audit is like, society's audit is like. Then apart from that, you have something called bank audit. Okay, for bank audit also again we have a CA inter revision which is available. You can watch that once. Okay, see if at all you want to learn in depth. Okay, otherwise if you want to read whatever is there in this book, we have really organized it easily. In the easiest way you can read. You don't have to struggle. Headings were clearly given. Keywords were clearly highlighted. You can easily read from this particular book. That's why if I cover everything within just 2.5 hours, it will not be coming qualitatively. That's why I focused on the major chapter for you, second chapter, which is provisions related to Companies Act. Company audit we covered in depth. Cost audit, which is most important, which is confusing part, we understood in depth. Secretarial audit we understood. NFRA IFC we understood in depth. Items of financials I told you to read self. Audit report topic, revision marathon I told you. This is the broad, and more than this, as at a conclusion, what I'm going to tell is, in the same book, PDF is there on the website. You just download the PDF. Okay, you don't have to, if you want to take a print, you can take a print, or if you want to order the book, it will take time for you to deliver. So instead of that, you can simply take a print. Question bank is also there in the same book. MCQs from CMA study material covered, compulsorily solve it. Past exam questions also covered. Whatever in the book it is given, no, same only will be there in past exam questions. There is no new question at all. There is no new question at all. And some students know they're referring 2022 year related question papers are also irrelevant, not required. You just have to read question papers from 2023 onwards. That too I will say 2023 December onwards only you read. Don't even touch 2023 June question paper. Directly refer past exam questions from 2023 December, 24 June, 24 December, 25 June, and if for next attempt upcoming June exams and all, 25 December also. Only from 2023 question papers related questions and MCQs only you solve. Before that it was old syllabus of CMA. That related questions, that related concepts, many will be there, not required. Easy or not? So what is the, you need to solve MCQs, you need to solve blanks also. See, why you need to solve? They may not ask you blanks, but you should solve it for understanding how different ways a question can come. Able to understand? Then you should solve previous year paper MCQs. Then you should solve previous year paper descriptive questions. These you should solve. So first you finish this marathon, you finish watching this, then go to audit report topic in CA Inter. Go to, in the audit report, CARO is already discussed. Then go to society's audit, corporate society's audit. Some timestamp you will definitely find it in CA Inter. Okay, society's audit, you will get a better idea. Here it is only simple. Main point, main theme I already told. Main theme of society I told. Local self-governance main theme I told. How to do audit of hospital and hospitality business, you can easily understand when you read on your own. Even if I tell also, it will be very simple only. Okay, in a marathon. So it is better you read on your own directly. Bank audit, if at all you want to understand, you need to have a CA Inter knowledge, so that will give you better. But in CA Inter, the bank audit is just too in depth. That much is not there here. It is only brief level, it is covered. So different types of entities, give a slow, a soft reading, thorough reading, that is more than sufficient. Okay, whereas provisions related to Companies Act, in-depth reading is required. Provisions related to Companies Act, in-depth reading. And once you finish Companies Act provisions, different types of undertakings topic, once you are perfect in these two topics, remaining subjects are also 3/4 strategy, you are perfect. If you still have time, then come back and see basic concepts of audit. Otherwise, don't even touch it. Only when you finish other subjects also major portion, then only come back and touch this. With the second chapter and third chapter knowledge, you can write 45 to 50 marks of the paper. That's it. Clear? Fine. So we'll wind up the session. Okay, so whatever we discussed, I'll merge it and upload on the YouTube. If possible, I will also keep audit report CARO related topic and then merge it, or else I will attach to this playlist. Okay, that's it.